is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Donald Trump needs a weak dollar.
Having achieved a soft landing, has the Fed kind of done its job?
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Fears over a broader regional war in the Middle East.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good Friday morning from the Bloomberg Interactive Broker Studio in New York City. To our worldwide audience, we are streaming live on YouTube. So head over to youtube.com and search Bloomberg Podcast Live. That's where you'll find us. Tom Keene is off today, but not to worry. The professional broadcaster, David Gura, joins us in here studio. So we got you for the next 3 hours. Bloomberg Surveillance. A lot going on out in the world. Tyler Kendall, Bloomberg Washington reporter. She is at Reagan Airport. We will touch base with her several times throughout the morning here to get the latest reporting from Reagan Airport and that air disaster. Sebastian Page, head of global multi-asset and chair of the asset allocation over there at T. Rowe Price down there in Charm City. He joins us here in studio. A lot of tech earnings this week, including some numbers from Apple last night. So we're going to have Anurag Rana, Mandeep Singh. They are the tech leaders at Bloomberg Intelligence. We're going to talk to them throughout the morning and get the latest on what's happening coming out of Silicon Valley. DeepSeek was the story, if you remember, all the way back to Monday.
A lifetime ago.
A lifetime ago. Greg Draco, chief economist at EY Parthenon. He's going to join us in studio as well, get his thoughts on this economy. So a lot to cover over the next 3 hours. Futures look a little bit positive here. The S&P up about 0.5% here early in trading. Let's go to Lisa Mateo right now and get a Bloomberg business flash.
And we've got NASDAQ futures leading the charge up about 0.8%, 183 points this morning. A big part of that, you were talking about it, those tech earnings. Shares of Apple, they're up 3%. Gave a reassuring revenue forecast for the current quarter, kind of offset those holiday results, which showed declines in China and the iPhone. Shares in chipmaker Intel, they're higher too, up nearly 2%. Better than expected fourth quarter revenue. It outweighed a warning that it's pushing to become more competitive. That is still a work in progress. But listen to this, Bank of America warning that big tech stocks are set to become the lagnificent seven this year because spending on AI is peaking. Well, we talked about NASDAQ futures. Let's get to S&P futures. Up 0.4%, 28 points. Dow futures up 0.3%, 153 points. We have the two-year yield, 4.20%, little changed. And the yield on the 10-year, 4.52%, and that is little changed. To currencies, the dollar is on the rise, actually set for its best week in 7. The Bloomberg Dollar Spot Index up about 0.2%. Shares of Exxon, they're up this morning 0.5%. It beat earnings estimates. Strong production growth kind of offset that drop in oil prices, refining margins. And then Chevron, though, on the flip side, lower, down 2%. Raised dividends by 5%, even as profit underperformed. Crude prices shrink. And it comes after a day, if you remember, Shell announced disappointing end-of-year profits as well. We have more earnings coming in, but I am out of time. We'll get to that in just a bit. That is your Bloomberg Business Flash. David and Paul.
All right, Lisa Mateo, thank you so much. We appreciate that. David Gura sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Torsten Slok, our good friend over at Apollo, out with an email this morning. I love his emails because they're just so easy to understand. Basically, the U.S. economy is strong. That's his call. And he's made combined, strong momentum in the economy is driven by high stock prices, high home prices, strong tailwinds to growth from tech capex, defense spending by the CHIPS Act, the IRA, and the Infrastructure Act. So he's basically saying the narrative that the economy is slowing and inflation is moving down to 2% is wrong. So there you go. So,
and we'll get some new inflation data this morning, 8:30.
Absolutely. PCE. Let's get down to Washington, D.C., get to the latest reporting from that air disaster from yesterday. Tyler Kendall has been at Reagan National Airport for the last couple of days getting the latest. She's our Washington reporter. Tyler, what's the latest reporting coming from Washington, D.C.?
Well, Paul, crews worked overnight on the search and recovery efforts. As we've been reporting, we are not expecting any survivors. We know 64 people were on the American Airlines commercial flight. An additional 3 U.S. service members were on the U.S. Army Black Hawk helicopter at the time of the collision. Now, the D.C. fire chief says that divers have reached all accessible areas. What that means is that we are expecting the search mission to enter into phase 2 today, with divers going in and starting to take out parts of the plane from the Potomac River in a bid to recover more bodies. Now, I was at the NTSB briefing yesterday. They are the agency leading this investigation They told us reporters that we can expect a preliminary finding report within the next 30 days, although information could start to come out ahead of that, particularly as the NTSB confirms to Bloomberg News that they have recovered 2 of the data recorders from the commercial flight. That's going to be absolutely critical in their investigation going forward because, Paul and David, there are still big questions here at DCA this morning, particularly as Transportation Secretary Sean Duffy said this tragedy could have been prevented.
Tyler, quickly here, we see folks behind you on YouTube with their luggage. The airport reopened yesterday at 11 o'clock, and I'm just curious sort of what the scene is like there at the airport. And then, of course, it's situated right next to the Potomac River where this crash took place. Just give us a sense of the degree to which you can still see sort of the recovery effort that's underway.
Right. There are still first responders out across the Potomac River assisting with this search mission. I was here at 11 a.m. Eastern yesterday when the airport reopened. I caught up with one passenger who was coming in with their rollerboard, saying that they weren't sure if they were going to make it to the airport today, considering the devastating news. But as we look ahead to this search and recovery mission, U.S. officials are trying to reassure the American public that the skies are indeed safe to fly. Operations are relatively normal here at DCA, although there have been delays and some cancellations on the departure board. Yesterday, I had counted at least 60 of them. And to your question about just the situation, the situational awareness of where DCA is, of course, we are very close to the Pentagon on this side of the river, and then on the other side in DC proper, the White House. That has led to questions about the absolutely strict air regulations in this area, considering the military craft that come through here and also the commercial airlines. There's going to be big questions moving forward about how those regulations might have been broken in this particular case and what's going to be done moving forward to ensure that this tragedy doesn't happen again.
Finally, Tyler, what's the next milepost for you and for everyone who's looking for the next piece of information? Will it be dissemination of the information from the black boxes? What's next?
Right, the black boxes and the so-called black boxes and what information we can glean from that, it's going to be absolutely critical, considering it will give us information about the flight's speed, duration, altitude, particularly after Defense Secretary Pete Hegseth yesterday suggested that this could have been an elevation issue. We're going to be watching to see if any briefings are added today from the NTSB or the FAA, and as well as the White House, as we know that this is going to be a coordinated federal response and that President Trump has been briefed on this situation.
Tyler, thank you so much for joining us. Appreciate your reporting. As always, Tyler Kendall, Bloomberg Washington reporter. She is at Reagan International Airport, and we will touch base with Tyler later on this morning to get the latest reporting here. Let's turn back to markets. Again, the S&P 500 up about 0.5%. The NASDAQ up about 0.8%. Yields, the 10-year Treasury sitting right there around 4.52%. Sebastian Page joins us here in our studio. He is head of a global multi-asset, and he's the chief investment officer at T. Rowe Price, a firm that I crushed back in the day. I got votes from T. Rowe every year. I was a sell-side analyst. They loved me down there. Sebastian, talk to us here about kind of how you're viewing market opportunities here. We had 2023, 2024, both had 20% plus gains in the S&P 500. Just extraordinary performance. How do you try to get positioned in 2025?
Well, first of all, Paul, we still love you at T. Rowe Price.
Thank
A
you.
lot of people listen to Bloomberg.
I want to know about that setup here.
Yes. Look, in the mid-'90s, you had 5 years in a row above 20%.
Right.
So that in itself is not a signal. I'm going to give you the most boring narrative, but that's where we stand right now in our asset allocation committee. Like you said, you were talking about Torsten Slok. The economy is strong. We're confident in the economy. That can always turn, but we're confident in the economy, yet we think that's the consensus and we're worried about valuations. In a nutshell, that's where we stand. We have a small overweight to stocks, and we're starting to pare it back.
Okay. I know that there has been a long-standing conversation about the need for this market to broaden out, and maybe what we saw on Monday was something catalytic. I don't know if people appreciated the kind of catalytic value of it, but that kind of wider debut of DeepSeek, I think, prompted people to rethink the narrative that so many people had bought into here. Do you see the market broadening out? What's it going to take to see sort of wider gains across stocks in particular?
We're positioned for broadening. I think we might be approaching peak concentration, and maybe this week is a catalyst. Here's something interesting I noticed yesterday. I was looking at what happened when the market sold off on DeepSeek. Value really outperformed on that day. So I went back and looked at the last 200 trading days. The market sold off by 1% or more 17 times over the last 200 trading days. 17 out of these 17 times, value stocks outperformed growth. Even though they underperformed overall, value has been trading defensive. And part of why I like our value overweight is that I think looking forward from where we are, you get less downside and perhaps similar or even better upside from here. And that's one way to play the broadening trade. I like that one better than small caps.
Yeah. So what is value for you? How do you guys define value at T. Rowe?
So look, all our portfolios are actively managed.
Yep.
When we look at value, what we like in particular, when I look at what our security analysts are doing, and you used to cover us. We have over 300.
Yep.
We do this really well. They like healthcare stocks. They see opportunities there. It's been beaten down. They like materials. Financials have been doing quite well. This is all the value sector, energy sector, especially if we get, some geopolitical shocks. So these are all parts of value that they like.
There was a line in your note that stood out to me, and that is that fundamentals have been concentrated, not just valuations. Why is that so important to emphasize?
Because I think there's too much bubble talk. I don't think we're in the bubble. And too many comparisons to 2000. In 2000, the return on equity of the tech sector was 15%, which is pretty good. Now it's 30%. So this is not your tech bubble of 2000. And if you look at, say, NVIDIA, right, it created $30 billion in new net profit in 2 years. I mean, that's like Nike's net profit total is $23 billion. So NVIDIA created more than a Nike in net profit in 2 years. So the fundamentals are behind this concentration. It's not just speculative concentration.
98, 99, 2000, very good years for me. You should have seen the stuff we were slinging back in the day. Revenue, please. Who needs revenue? Much less profit. Much different today. Sebastian, how about in the fixed income space here? I feel pretty comfortable sitting in a 2-year treasury. I think my government's going to return 4.2% to me, and I'm going to get my money back at the end of 2 years. Do I stick there, or do I take some credit risk?
So right now we have an overweight to cash and an overweight to credit. We're not worried about a recession. Spreads are incredibly tight. This is the valuation concern again. But you get a pretty good total yield, which is attractive for an asset allocator. And when we do the bottom-up analysis and you actively manage your spread exposures, we're comfortable having an overweight. But we're worried about duration, like just straight bonds, treasuries. You're looking at a flat yield curve. You're looking at inflationary pressures. You're looking at growth resetting higher. You're looking at massive deficits. All these forces makes us slightly worried about the long treasury market.
Lisa, just a moment ago, referred to Michael Hartnett's latest note. He coined the Magnificent Seven term and now has this Magnificent Seven update. And buried in that note is his interest in European stocks in particular, I guess Japanese equities as well. But turning to Europe, we see European stocks having their best month in a couple of years now. And I wonder if you see Europe as unloved as he does, as maybe turning a corner here. I don't know if you paid close attention to what the ECB said yesterday, but is there reason for optimism when you look across the Atlantic now?
We're neutral between non-U.S. stocks and U.S. stocks. Again, that's a bit of a cop-out, a boring answer. But I've been talking with clients about the tyranny of high expectations. The expectations for U.S. stocks are incredibly high. You have the opposite in Europe. Yep. The expectations for earnings, for growth, Germany's in a recession, are so rock bottom that it doesn't take much for Europe to outperform with this starting valuation spread. Now, mind you, that valuation spread has been a complete trap for 15 years. Every time people have tried to overweight Europe solely on valuation, it's been a trap. So we end up at neutral, David.
You've got a new book coming out in April.
Yes.
The Psychology of Leadership.
Yes, sir.
Talk to us about that and how maybe you apply some of that stuff to your investment outlook.
Yeah, there's something in there about core beliefs, which I think is really interesting when it comes to investing. People have core beliefs in the way they just view the world. Some people are basically pessimistic. Some people are basically optimistic. That applies to investing. And I think we're in a moment in investing where core beliefs have been challenged. So, basic core belief. We all learn this in CFA, as Tom Keene would say,
Yes,
right?
he would.
We all learn that valuation matters. And guess what? That core beliefs has kind of gone out the window, and it's been the trend is your friend, which is another core belief in investing. So when I look at the market broadening and I put this in context, I think we as an industry have to examine our core beliefs for investing, and we might be about to shift here where valuation reasserts itself.
We're going to have you back, I'm sure, to talk about the book when it's published in April. I should say you can pre-order it now. But I am curious how it was a project that you decided to undertake. So here you are, Chief Investment Officer of a major financial services firm. How did you become interested in leadership? How did you think that you'd be somebody who could bring something new to that conversation?
I just started by wanting to improve myself. And I actually love to write. I'm addicted to writing. So these two things combined with discussions with a sports psychologist. I think sports psychology is super underrated in the world of investing. And so I just got really into it and started writing on weekends, and here we are.
Here we are.
Here we are. All right, very good. Sebastian, thank you so much for joining us. Sebastian Page, he's head of global multi-asset. He's the CIO at a little firm down in Baltimore called T. Rowe Price down there in Charm City. With our news in New York City, here's John Tucker.
All right, gentlemen, there are no survivors in the collision between American Eagle Flight 5342 and that Army Black Hawk helicopter near Reagan National Airport. Todd Inman with the National Transportation Safety Board says crews are still pulling victims from the Potomac River.
We're still in a recovery mode, first and foremost, to get the perishable evidence and specifically the bodies out. Once we get a little bit closer into that, we'll be able to better understand the dynamics of what may have happened upon impact.
Both black boxes from the American Eagle flight have been recovered. The NTSB could put out a preliminary report within 30 days of the accident. Tulsi Gabbard, President Trump's pick to be Director of National Intelligence, faced questions from Senate Intelligence Committee members, many centered on what critics see as their shifting positions on intelligence collection as statements sympathetic to Russia. And Bloomberg's Amy Morris has more from Washington.
Several lawmakers focused on Gabbard's support for NSA whistleblower Edward Snowden, who leaked classified documents, then fled to Russia, where he's now a citizen. Democratic Senator Michael Bennet of Colorado.
Is Edward Snowden a traitor to the United States of America?
As someone who has worn our uniform in combat, I understand how critical our national security
Apparently
is.
you don't.
Gabbard's nomination is not certain, with many Republicans declining to declare their support, and Democrats criticizing her for appearing sympathetic toward authoritarians like Russia's Vladimir Putin and Syria's Bashar al-Assad. In Washington, Amy Morris, Bloomberg Radio.
And Donald Trump is poised to impose 25% tariffs on $900 billion worth of goods from Canada and Mexico starting tomorrow. The president spoke from the Oval Office.
Mexico and Canada have never been good to us on trade. They've treated us very unfairly on trade. And we will be able to make that up very quickly because we don't need the products that they have. We have all the oil you need. We have all the trees you need, meaning the lumber. We have more than almost anybody in those two categories.
The president speaking there from the Oval Office yesterday. And Vertex Pharmaceuticals has gained U.S. approval for the first new type of painkiller in more than 2 decades. And this paves the way for a safer alternative to addictive opioids that have been linked to hundreds of thousands of deaths. Vertex's pill, called Journavax, gained FDA clearance to treat moderate to severe acute pain. The wholesale acquisition cost for the twice-daily pill is set at $15.50. Global news 24 hours a day. And whenever you want it, Bloomberg News Now. I'm John Tucker, and this is Bloomberg. David, Paul, Lisa.
Hey, John Tucker, thank you so much. We appreciate this. As a former banker, I love this story. J.P. Morgan's preferred stock sale fuels frenzied hunt for coupons. So J.P. Morgan, when these big banks issue earnings, almost invariably the absolute next day they go to the bond market to issue a bunch of debt and refinance and do all that kind of stuff based upon their most recent results. J.P. Morgan Chase went one step further. $3 billion
$3 billion.
6.5% coupon. Wow. Which is, I'm getting 6.5%. That's like getting 6.5% from the U.S. government.
Which could carry, yeah.
That is such a great deal. And of course, it worked. The issue is most heavily traded among U.S. corporate bonds and preferreds. this week. So people were just going crazy trying to get some of this stuff. They got more than $10 billion in orders, again, for this $3 billion issue. So people love the banks.
Yes.
You hear that from PMs all the time. Maybe, tax cuts, lighter regulatory view of the banks. So people love the bank sector. So if you're JP Morgan, let's go out and do some preferred.
And I should say part of a trend here. We saw Citigroup with a $1.5 billion preferred in late November, 6.75% coupon, and Goldman Sachs, 6.85 on its release in January. So a trend shaping up here. They know what they're doing.
There is. I mean, this is, coming out of the great financial crisis. I mean, the banks, have come back as strong as ever. I mean, some of the returns they're generating because some of the regulations placed upon their businesses aren't quite as high as they were pre-pandemic, but they're pretty darn close. And it looks like it could get even better for them. So again, JP Morgan coming to the market this week, $3 billion preferred stock offering, 6.5% coupon, huge demand. The securities trading all over the place. S&P futures up 30 points. That's 0.5%. NASDAQ up 180 points. That's 0.8%. We'll have more coming up. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures advancing. This as investors await the Fed's preferred inflation gauge. Yeah, the latest core price Index data expected to see a slight pickup in December. Comes out in about an hour from now. Stay tuned for that. We'll go to NASDAQ futures up 0.8%, 174 points. Dow futures up 0.3%, 160 points. And S&P futures up 0.4%, 29 points. Want to head to the 2-year yield, 4.21%. That's little changed. And the yield on the 10-year, 4.52%. And that is little change. Commodities, have to point out gold rose to a record high. We have COMEX gold and spot gold both over $2,800 an ounce. This is kind of as those investors turn to safety due to President Trump's tariff threats. We go to the Bloomberg Dollar Spot Index. That's up about 0.2%. Now to earnings. Colgate-Palmolive, its CEO said it delivered another quarter, a full year of strong organic sales growth, but its shares down nearly 1% right now. And finally, Charter Communications reported revenue for the fourth quarter that met estimates. Its shares up 3%. And Visa reported fiscal first quarter profit beat estimates. Its shares up 2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. David and Paul.
All right, Lisa, thank you so much. Speaking of Charter Communications, David, do you subscribe to a cable system?
Only for I have Verizon Fios, but we still have YouTube TV. I'm sticking with it despite the price increase through the Super Bowl.
Lisa, do you subscribe to cable?
I do.
Me too.
I paid cable and the subscription.
Yeah, it's just crazy. I mean, I was just thinking Charter had some decent numbers today. The stock's up a couple of percent. But Comcast yesterday, some weak numbers. The stock was down 10%. I mean, as a cable investor, I don't know what you do there. And I
thought the wildest thing from that was looking at Peacock. What percent actually look at the kind of SpinCo properties, the ones that have been spun out? It was like 2 or 3% of all viewers. So I thought that was fascinating. So we watched that kind of play out.
Tough business to be there for those cable companies. Also a big week for technology companies and earnings. Last night we had our good friends at Apple report numbers. The quarter seemed weak, but the guidance I think was a little bit better than maybe people were thinking about. The stock's up about 4% here in pre-market trading, although it has been an underperformer this year and over the trailing 12 months as well. So let's talk to somebody who knows this stuff. Anurag Rana, tech analyst, Bloomberg Intelligence, joins us now. Anurag, give us your 2 cents from what we heard from Apple last night.
Yeah, going into the quarter, everybody was concerned about China, and the headline number on China was really bad. I mean, negative 11%. So that really, took the stock down a little bit. But during the conference call, Tim Cook basically said that when they were going into the quarter, they had assumed China to be bad, and they had built up the inventory based on that. But half of that loss of negative 11% was because they didn't have enough phones to sell at that time. So that really pacified a lot of investor fears. I think the stock reacted after that. And the second most important thing was they said that the iPhone 16 family of phones are doing better in regions where artificial intelligence has been launched or Apple Intelligence has been launched. So that was another factor that gave investors some comfort that as this functionality is rolled out the rest of the world, we should see potentially a little bit of an acceleration in second half.
It wasn't too long ago, sticking with China here, that you could pick up your iPhone. It would say designed in Cupertino, made in China. This is a company that has, of course, lived through the first Trump term and the tariffs threats, and no doubt is paying close attention to what happens here next. But in the meantime, has kind of diversified its supply chain, I gather, tried to move some of its operations out of China. How much is the looming threat of more punitive tariffs weighing on Apple? Did we get any insight into that in that earnings reporter call that followed?
They did not talk about tariffs. I think they just skirted the question on the side. But remember, in the first big tariff war, they really did not get impacted. They, you can say, got a special benefit out of it. So everybody is under the assumption if we do get into a bigger issue in China, they would, on the tariff side, they should be okay. But the bigger question is if things really get bad between US and China, China can throttle Apple anytime. Most of the parts, almost all of the parts are made in China, even though some of the assembly is done now outside China, let's say in a place like India. But I mean, please don't think that Apple is completely dependent on China for supply chain. There are no two ways around it.
So as we think about China from a demand segment, like in terms of the end user sales, talk to us about the competitive environment there. I'm concerned, A, the competitors are getting a lot better, and B, this anti-U.S. rhetoric might just make the marginal Chinese consumer, I'm going to buy local versus buy American.
Yeah, I think, Paul, that is single biggest question for Apple investors. I mean, this is the big difference between them growing 3, 4, 5% to 6, 7, 8%, and that's all China. One of the things that we are seeing is they are, Tim Cook's making a lot of rounds in China, investing a lot of, you could say dollars into the local economy. So there is a very, very, good chance that when Apple Intelligence is launched in China, and we'll find out which large language provider they partnered with, that could change things. The big shift that has happened in the last 2 years is because of a company, Huawei, did not have a really high-end phone at one point, and they just came up with it, and that led to a lot of upgrades. So, we are hopeful that the launch of Apple Intelligence in China can change things around for them.
This has been a week with a lot of introspection in C-suites about AI and how companies approach AI, and I'm curious how you see Apple's decision to essentially outsource a lot of its work on artificial intelligence. It is not making substantial investments in kind of pioneering its own models. It's partnering with other companies, using other models. Fair to say at the end of this week, at the end of this very tumultuous week, they can take a bit of a victory lap in light of that approach and sort of how it seems to be succeeding for them?
Yeah, but their policy has always been like this. Remember, there is a big argument going on that they could have gotten into search. But they said, listen, that's not our business. We don't want to do it. We will just partner with the best search engine out there, and that's Google. And Google pays them a lot of money for that. In this case, they decided in the US when they launched Apple Intelligence, they said, well, OpenAI has the best model. Let me put that on the phone. So when you have a distribution arm like they do, over 2.35 billion devices out there, over 1 billion smartphones, they pretty much control what people use it as. If they and they usually go with the best option anyway. So in whichever country you see the best model out there, you will see that on the Apple iPhone.
Anurag, let's switch gears to Microsoft. The stock's been hit hard over the past couple of days, down about 7-8%. And if you look at the stock over the past 12 months, it's pretty much flat. What's happened to the Microsoft story? Or what's the concern out there in the marketplace?
Yeah, this is the true game of going into a quarter with different expectations. Apple comes up with 4 to 5% growth and people love it. And then, Microsoft does double-digit growth and then people don't like it. The bigger question over there is you're spending so much money in CapEx. When do I see the benefit of that on Azure Cloud Computing? The Azure Cloud Computing numbers are very good. They were up 31%, but they guided to 31 to 32%. They didn't go 32 and above. They came at 31, so people didn't like it. We think that for Microsoft, all these investments will pay off in the long run. They will grab more market share than anybody else in the software world when it comes to AI workloads. People just have to be a little more patient about it. And the second thing is, if you go back and look at the stock for almost 1.5, 2 years, ever since ChatGPT was launched, the stock's done really well. So I think there's a period of digestion in those valuations at this point.
Let's just take a step back here at the end of this busy week as we've gone through all of these mega cap tech earnings. And I wonder sort of what your broad takeaways are just about how they're doing as a whole. So less interested here in sort of what one's doing versus the other. But in terms of broad trends that we're seeing in tech, what stands out to you?
Yeah, in the past week, we have thought about two scenarios. Scenario A, nothing changes in the way large language models are deployed. You still need a lot of compute power, which means a lot of GPU souls, et cetera, et cetera. Scenario B, that in order to create a good large language model, you do not need that many GPUs and the cost of implementing AI goes down. In that particular case, it's not that good for NVIDIA, but for the rest of the ecosystem, whether it's software companies, whether it's services companies, their adoption curve accelerates quite a bit. So that's what you saw somewhere in the middle of the week, that people were not so much excited about the semiconductor stocks, but going more into the software area. So those are the two scenarios that's going to play out. I will say every week we're going to get new information from some of these large language provider models that how they are seeing a new approach to build these models, train those models. So I think there's a lot more to come on this story, as we go along.
All right, Anurag, thanks so much. We appreciate that. Anurag Rana, he's a senior technology analyst for Bloomberg Intelligence from the little-known technology hub known as Chicago, Illinois. So we appreciate getting his thoughts here. Tomorrow's February 1st.
Yes.
Are tariffs going to be announced tonight, tomorrow, or not?
We know that the president, at the end of the day, is going to make his way down to South Florida, to his home, Mar-a-Lago, and it seems like, from everything I've read this morning and what I've been hearing over the last few days, he's serious about this. He's serious about putting them into place. I think the open question here is, if they are put in place, how long will they last? I know over the course of the next couple hours, we're going to talk to a couple analysts and our reporter, Josh Wingrove, who's been covering this very closely, just about what that's likely to mean, wide they're going to be. I mean, we heard there the clip of the president a few minutes ago talking about us having enough trees, enough oil. Another open question is, would these tariffs be applied to energy? Because, of course, some of that crude is used in the Midwest in particular for refineries. So a lot of open questions, but my sense is we're moving full speed ahead toward those tariffs being implemented, Paul.
Very good. All right. Good golf course down there in Mar-a-Lago. Played that way back in the day. Lost a lot of balls, a lot of water, which it's one of the reasons I don't like Florida golf courses. So much water. My golf ball just seems to find it. S&P 500 up 27 points. That's 0.5%. The Nasdaq's up 168 points. That's about 0.8%. We'll have more coming up. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got NASDAQ futures leading the way this morning. This is at the end of a volatile week for tech. Speaking of which, Apple right now up nearly 4%. A quick side nugget too, the 26 NASDAQ 100 members due to report this season have delivered an almost 6% surprise on earnings. So let's get to NASDAQ futures up 0.7%, 164 points. S&P futures up 0.4%, 27 points. Dow futures up 0.3%, or 141 points. We have the two-year yields 4.21%, little change, and the yield on the 10-year 4.52%, and that is little change. We have the Bloomberg Dollar Spot Index up about 0.2%. Bitcoin down about 0.5%, but above 104,000. We have a few companies making news this morning. Chinese AI startup DeepSeek. Sources saying U.S. officials investigating whether it bought advanced NVIDIA chips through third parties in Singapore. Then sticking with AI, the Wall Street Journal reporting OpenAI in talks to raise up to $40 billion in a funding round that would value the company at $340 billion. That is your Bloomberg Business Flash. David and Paul.
All right, Lisa Mateo, thank you so much. We appreciate that. David Gura sitting in for Tom Keene here this morning. Tom may be back Monday. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We are streaming live on YouTube, so head over to youtube.com and search Bloomberg Podcast Live, and it brings you right to us. Greg Dacco joins us. He's the chief economist at EY Parthenon. He joins us here in our Bloomberg Interactive Broker Studio. Greg, is the U.S. economy becoming even more exceptional relative to other parts of the world? Where's the relative growth rate for the U.S. economy here?
Well, I think U.S. exceptionalism is certainly one of the big themes for this year, for two reasons. The first one is that the U.S. economy remains the growth leader on the global scale. It has been growing at a 3% pace for the better part of the last 2 years. Yesterday's GDP data showed that even through 2024, we had growth that was around 2.5%. So still very robust growth. And importantly, it's driven by strong fundamentals, strong income growth, strong productivity growth, and a robust labor market. That's all the ingredients that you want to have for a sustainable trajectory for the U.S. economy, for any economy for that reason. But it's also going to be a global growth disruptor. And I think we have to increasingly focus on that element, because the policy mix that the administration is putting forward, whether on the trade front, on the fiscal front, on the immigration front, on the regulation front, is going to have effects and consequences for the U.S. economy, but also for the rest of the world. So the disruption element is very important to pay attention.
Greg, we had Paul putting me in the hot seat a minute ago asking me if these tariffs are going to go into place. And I wonder how you're thinking about that, the likelihood of that happening, of seeing these kind of broad tariffs on Canada and Mexico, and what the implications of that would be here in the U.S.
Yeah, let's take a little bit of a step back in terms of the trade policy environment. We have an environment in which the administration has multiple goals on the trade policy front. Number one, it's addressing imbalances on the trade front. Any deficit with any trading partner is going to be focused on. Number two, it's revenue generation, using tariffs as a means to offset or to pay for some of the tax cuts, some of the spending increases. Those are going to be two alternative elements that drive policy going forward. With regards to tariffs vis-a-vis our major trading partners, Mexico, Canada, China, those can have big negative consequences on economic activity, and that has to be kept in mind along with inflationary pressures. We've simulated a scenario where the U.S. would impose 25% tariffs on Mexico and Canada. The hit to growth in the U.S. would be around 1.5% to 2%. That means essentially losing nearly a full year of economic activity due to these tariffs. For Mexico and Canada, it puts them in a recession. You're talking a drag of around 4% for these economies. On top of that, you have the worst of all environments in that you generate stagflation, because it's low growth and you have upward pressure on inflation that leads to put the Fed in a very delicate situation. Do you react to higher inflation? Do you react to slower growth? What do you do in that environment?
Did you hear anything from the Fed this week that leads you to believe that they're leaning one way or the other here as it relates to price stability versus, full employment?
Well, I think we heard more at the last meeting, where Powell had his teal book from 2018 and said, well, back then, we would have thought that looking through the tariffs would have been the optimal situation, the optimal type of approach, because we were in a low inflation environment. This time around, he positioned it slightly differently. He said, well, we don't really know what the effect of tariffs is going to be. There will likely be a drag on economic activity. There will likely be an inflationary effect. But he also said, let's not forget, consumers are reacting to high prices, so they might also pull back on some of their spending. He was also clear to say that policymakers are in a wait-and-see approach, very reactionary. I've argued too reactionary. They are excessively dependent on every single data report. Employment report comes in hot, they extrapolate to infinity and believe the labor market is never going to slow down. Consumer price inflation comes in higher than expected, they expect higher inflation over the course of the next year. That, in my opinion, is misguided because you tend to over-extrapolate while focusing and zooming in on a bullseye target of 2% inflation, which risks having excessively tight monetary policy.
With great self-awareness, I will bring up the data point that we're going to get today. That's core PCE, and we know that the Fed cares an awful lot about it. But you have drawn this distinction between kind of idiosyncratic inflation and sustainable inflation. Fold the data that we're going to get today into that prism through which you're looking at the inflationary environment.
So I've talked about a bump in the road at the end of 2024 when it comes to inflation. Yes, we've seen inflation be a little bit stickier than anticipated. But if you look at the core CPI index, which is a good gauge of where core PCE is going to land, you're still seeing disinflationary pressures. And that's what I focus on most of all. I focus on the fact that fundamentals remain disinflationary and will likely remain disinflationary into the spring of this year. Why? Because we have increased consumer caution when it comes to spending. Individuals at the lower end of the income spectrum, they're constrained by this high price, high interest rate environment. They're being more cautious with spending. People at the higher end of the income spectrum, less concerned. But still, overall, that's disinflationary. Pricing power, much, much less than anything we've seen over the course of the past 2 years. Productivity growth, we were just talking about that. That is very good for growth because it lifts the supply side. It's also good for inflation because it's disinflationary. Right. And then you have idiosyncratic factors, shelter cost disinflation, insurance cost disinflation. Those are all also helping and will continue to help until we see the inflationary effect of the policy mix that's coming due.
Greg, great stuff as always. Really appreciate it. Greg Dacco, he's the chief economist at EY Parthenon. With our news in New York City, here's John Tucker.
And good morning. The investigation continues into the deadly crash between an American Eagle jet from Wichita and that Army helicopter near Washington, D.C.'s Reagan National Airport. 64 people were killed aboard Flight 5342. 3 soldiers died in the Black Hawk helicopter. Investigators have recovered the black boxes from the regional jet. Bloomberg's Danny Lee reports the NTSB is now analyzing them.
These will be very important things to analyze in the days and weeks and potentially months to come. So, yeah, that kind of evidence recovered, but still, many answers and obviously the recriminations from one of the worst air disasters to happen in the U.S. in decades, given it is such a very safe aviation system.
A preliminary report could come from the NTSB within 30 days. The victims of that crash included teen figure skaters returning from a national meet with their mothers and coaches, an Ohio college student coming from her grandfather's funeral, 2 Chinese nationals, and a group of hunters headed back from a guided trip in Kansas. The FDA has approved the first new type of painkiller in more than 2 decades. Let's get more in this report from Bloomberg's Gina Cervetti.
Vertex Pharmaceuticals gained approval for its pain pill to treat moderate to severe acute pain. It paves the way for a safer alternative to addictive opioids that have been linked to hundreds of thousands of deaths. The wholesale acquisition cost for the twice-daily medicine is set at $15.50 per tablet. Vertex's drug has been hailed as a scientific breakthrough because it eases pain without entering the brain, minimizing the risk of addiction. Each year, about 125 million opioid prescriptions are written for Americans with pain caused by broken bones, burns, surgeries, and other injuries and procedures. More than 500,000 U.S. deaths were linked to overdoses of the addictive drugs from 1999 through 2019. Gina Cervetti, Bloomberg Radio.
And Tulsi Gabbard, President Trump's pick to be the U.S. spy chief, ran into bipartisan criticism over an episode from the past, her championing of Edward Snowden, who rocked the intelligence world 12 years ago with his disclosure of top-secret U.S. spy programs. A Democratic Senator Michael Bennet of Colorado had this exchange with Gabbard during her confirmation hearing.
Is Edward Snowden a traitor to the United States of America?
As someone who has
I'll go on
worn
to
our
my
uniform
questions.
in combat, I understand how critical our national security
Apparently
is.
you don't.
Gabbard's nomination uncertain, with many Republicans declining to declare their support. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm John Tucker, and this is Bloomberg. David, Paul, Lisa.
All right, John Tucker, thank you so much. We appreciate that. Just looking at Bitcoin off 0.3%, still around $105,000. This is Bloomberg.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines on Bloomberg Surveillance with Tom Keene, Paul Sweeney, and Lisa Mateo.
All right, folks, your daily look at the front pages around the world is brought to you by IBKR. Will the percentage of the U.S. experiencing drought conditions exceed 18%? On February 18th, 2025. At IBKR Forecast Trader, the yes was recently at 35%. What's your take? Trade your prediction at ibkr.com/forecast. Lisa Mateo, newspapers. What do you got for us today?
Okay, Super Bowl around the corner, right? You know, fans love their wings and their beer, but guacamole is a big part of it. You got to have the guac with the chips, okay? But now you might have to pay more for it. And the reason they're saying is because, you know, we've been talking about President Trump starting to possibly set off those first wave of tariffs tomorrow. Canada and Mexico in the spotlight. So Mexico, yes, supplies upwards of 90% of the avocados that
90%.
Americans eat. All right. So the prices could go up. There was a drought in Mexico, already shrank the crop to begin with. So it has this like interesting take about, is Mexico the only place to get avocados? Because that's what I started thinking. I'm like, is that the only place you can get them? Yeah, so it says how Chipotle gets them from like Colombia, Dominican Republic. A grocery chain by Kroger gets them from Chile and Peru. But everything comes
Avocado
from
prices
Mexico.
already up 14% this year. Wow.
Do you make homemade guacamole?
I do. I'm not a guac person.
I made some last night.
Lisa Mateo, there you
failed to bring it in.
Yes,
to the Direct Broker studio.
So what's any secret to your guac here?
No, I got the tomatoes, the onions, the cilantro, lime,
maybe a little lime,
salt and pepper, a little garlic in
Classic.
there.
Are you a guac person?
Yes.
You're a guac person?
I'm such a guac person, but it is expensive.
Yeah.
I mean, I get them, at the wholesale, so I try to go
You buy
that
by
route.
the gross, by
I
the
buy
ton.
by the bag, and then you got to kind of put
Lisa
them
has
away.
two
so they can
refrigerators in the
ripen.
garage, or two freezers. What do you got? Two freezers.
I do.
Chipotle also getting avocados from Lisa's backyard.
Yes,
if they need. Yeah.
But you can't do. What are you going to switch to salsa? I don't.
I'm
think
a salsa
so.
person.
Oh,
Yeah,
okay.
spicy.
All right.
Yeah. All right. What else we got?
All right. This is for you, Paul, because I know you
Yes.
love Landman on Paramount, right?
Do you watch
So-
Landman?
I have not yet watched it, but I've heard you touting it.
Yes.
I don't know what one is. Can you define that for me first? This is
okay.
Good.
This is it. And by the way, there's a story in a journal
cut off
saying
Lisa
that this
completely.
Landman thing's totally not real. I mean, it doesn't depict it correctly, I guess is the point. But in the context of this show, the Landman is the oil guy out in the oil patch in West Texas that actually does it all. He manages all
Negotiating
the oil rigs.
leases.
It does everything.
Okay.
It keeps local, Mexican cartel gangs out of business. So it's.
And you've told me this has made you an expert.
I'm an expert on the oil and gas business, and it goes back to my point. Billy Bob Thornton, pound for pound, the best
he's the
cursor
best.
on television.
But he's the best actor.
Yeah,
I love
I mean,
him.
he
Love
curses
him.
better than anybody. So anyway, that's my review.
But it's saying how like the people of the real landmen, like all their families are calling them now saying, "Are you okay?
Yes.
Like, is
Yeah.
everything? What do you do? Like, they're calling them in a panic to see if they're okay." But they're saying, well, you know what? My job's not that exciting. I really sit behind
A lot
a
of Excel
desk and I look
spreadsheets
through contracts and real estate records. And,
so this guy says his Mondays are a little different. He spends most of his time reviewing lease contracts.
There you go.
Perusing real estate records and advising landowners on how to deal with oil and gas companies that drill on the property, all sitting behind an office desk.
Apparently, the amount of Michelob Ultra they drink, or Michelob Light, is
Michelob
accurate. Ultra, excuse me, is accurate. That the real landmen also drink that
It's a
quantity.
tremendous product placement there for Michelob Ultra. All right, what's next?
All right, lastly, this one, maybe you can help me out a little bit. With the banker bonuses, they're saying that they're turning into this kind of scratch-off ticket because stock swings, bonuses come in these restricted stock units, it can be unpredictable. And that's
this is how it works.
Okay.
In a good year, which we have many good years, cash only. Don't even talk to me about stock or RSUs or any of that garbage. When we have a bad year or two and they don't have the cash on hand, then maybe I'll entertain taking some of this garbage. But I sell it all. The first,
minute you
second
can.
invest.
Yeah.
The first, second invest. The best trade I ever made was selling Credit Suisse stock in December of 2004. 87 Swiss francs. Go take a look at where that is now.
Okay.
Zero.
Wow.
87
so
Swiss francs.
See, it's crazy because it's just so unpredictable.
But you're getting into that vesting process. There's actually a very cool calculator embedded in this story where you can sort of see the true value of your bonus years out.
Yeah.
My
my advice to kids is don't
Put it
take
in
this
cash.
stuff. And if you do take it, sell it as quick as you can. That is the newspaper segment with Lisa Mateo. We appreciate that, as always. It is bonus season on Wall Street, so that was a timely story. We're going to have more coming up. This is Bloomberg.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
What do you say to people scared stiff in cash?
We've got an administration, presumably, that will be pro-business, lower taxes.
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
The president is focused on geopolitics.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
All right, David Gura sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker studio. We are streaming live on YouTube. So head over to youtube.com, search Bloomberg Podcast Live, and that's where you'll find us. Futures generally higher here this morning. We are following this air crash story from Washington National closely throughout the morning. We are fortunate to have the on-the-ground reporting. Tyler Kendall, Bloomberg Washington reporter at Reagan International Airport, joins us now. Tyler, again, the black boxes have been recovered from the airliner. That's the good news. Do we have any sense of timing when the investigators will really get access to that data and when maybe they'll be able to talk about it?
Well, the NTSB says that they are already starting to go through those so-called black boxes to get the data, particularly about the altitude, the elevation, the speed of the aircraft at the point of the collision. That's going to be absolutely pivotal in their investigation as they try to start to piece together exactly what happened. And it's starting to raise questions about congestion here at DCA and questions about the flight patterns and how these two aircraft ultimately collided, despite officials saying that they were on what's considered to be normal flight paths. Today, we are expecting the search mission to continue. The DC Chief of Fire says that divers have entered all areas that are considered to be accessible. That means that we are likely moving into a second phase of the search mission where we will see divers start to bring out parts of the plane out of the Potomac River in a bid to try to recover additional bodies. As you know, and as we've been reporting, there are no expected survivors. All 67 of the passengers between the commercial aircraft and the U.S. Army Black Hawk helicopter are expected to be presumed dead.
Tyler, I want to ask you about the investigation that the Pentagon is undertaking here. And we had that news conference yesterday with the president at the White House, and his defense secretary was there next to him. Yes, there's this NTSB-led investigation, but what we heard from Secretary Hegseth is that the DOD is going to be looking into this closely as well. Tell us what you can just about what they're doing and what we've learned thus far about that helicopter in particular.
Well, the Pentagon says that they are launching their own investigation. We know that that unit was suspended for 48 hours before taking off any other flights from the base where they are situated as they try to get this investigation underway. Now, Defense Secretary Pete Hegseth was the one that originally floated that there might have been an elevation issue here. That is why that flight data from the so-called black boxes is going to be so critical, as there are reports that it did appear that the helicopter might have been flying a little higher than normal. But as we start to get additional information here, we know that Pete Hegseth said that this was an operational training mission, but not to read too much into training, that this is actually routine and that they do this because of how DCA is situated so close to the Pentagon. These nighttime routine missions are meant to prepare the soldiers so that in the event of an emergency, they could evacuate officials from the Pentagon quickly to the closest airfield. But still, big questions here. We do know, as Pete Hegseth has confirmed, that all of the pilots that were in that helicopter were considered to be experienced pilots. It's actually the lead helicopter operator had over 1,000 miles under 1,000 hours, under his belt. That is considered to be pretty significant, considering when you think about it, David, helicopters only really go about 2 hours at a time. They make those more shorter distances.
Tyler, yesterday in the press conference, President Trump seemed to suggest that air traffic control played a role in this, perhaps before any real evidence has been gathered yet. Have we heard any kind of response from the air traffic control community, their representatives?
So I actually had the chance to catch up with Senator Mark Warner, a Democrat from Virginia, yesterday. He also raised these concerns about what has been a chronic and widespread shortage when it does come from air traffic controllers, and trying to get people into these positions that are so critical to our national aviation safety. Now, there has been reports that perhaps the air traffic control tower was understaffed. We're still working to confirm those. And we also know that the union representing the air traffic controllers is working closely with the NTSB on that investigation. At this moment, officials are not giving us too much information, saying that they're going through this data and all the evidence slowly and independently as they try to put together their formal review.
All right, Tyler, thank you once again for your reporting. Tyler Kendall, Bloomberg Washington reporter at Reagan International Airport in the Metro D.C. area. Futures looking positive here. Let's get a little bit of a reset on these markets. For that, we go to Lisa Mateo in a Bloomberg Business Flash.
Yeah, and we have NASDAQ futures leading the charge this morning, up about 0.7%, 157 points. A big part of that, tech earnings. We have shares of Apple up about 4%. Reassured investors, sales will rise in the low to mid single digits in the current quarter. Its greater China revenue and iPhone sales, though, did miss. Shares of Intel higher, too. They're up nearly 1%. Sales and profit outlook fell short of projections, but its revenue did beat. So we talked about NASDAQ futures. Let's get to S&P futures, up 0.4%, 26 points. Dow futures up 0.2%, 131 points. The two-year yield at 4.21%, little changed. And the yield on the 10-year, 4.52%, and that is little changed. To currencies, a dollar on the rise. It's actually set for its best week in 7. The Bloomberg Dollar Spot Index up about 0.1%, and we have shares of Exxon. They're higher this morning. A beat on earnings estimates. Strong production growth actually offset that drop in oil prices and refining margins. And then we go to Chevron. Their shares lower, raised its dividends by 5%, even as that profit underperformed. Crude prices shrink, and after that profit disappoints because oil slumping, like we said, comes a day after Shell, though, announced its disappointing end-of-year profits. That is your Bloomberg Business Flash. David and Paul.
All right, Lisa Mateo, thank you so much. We appreciate that. David Gura in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, and we're streaming live on YouTube as well. So head over to youtube.com/Bloomberg Podcast Live. Bloomberg Surveillance today is brought to you by Cohn Resnick. Advisory, assurance, tax with potential changes on the horizon. Will you need to rethink your tax strategy? Cohn Resnick tax advisors can help keep your business at the forefront. All right, equity gains 23, 24, both in the kind of low to mid 20s percentages. Really strong years for the equity trade. Hey, in the month of September, we're up 3.2% so far. So it seems like the equity trade, the animal spirits are still out there. Let's get a handle on that. Katie Kaminsky, Chief Research Strategist at Alpha Simplex, joins us. Katie, how are you guys thinking about risk assets here in 2025, given some of the performance we've seen over the last couple of years?
This is a good question, because I think the biggest question most investors are asking themselves, 2 great years. How can you where do you go next? But, really, if you actually look at the data, things are still looking strong. Signals are still positive. Sentiment is still high. I do believe that a lot of people are, though, re-questioning some of the potential for rotation and just dispersion across the space. So it could be a good year to pick some winners and sort of sort out some of the things that may lag behind.
Katie, I know you're disappointed Tom's not here, but were he, I know that he would tout your academic bona fides and point out that you have a BS in engineering from MIT, and I'm going to use that in a very Tom Keene way to ask you how you processed what we learned this week from DeepSeek about AI and the advancements that company appears to have made. We've talked a lot this morning just about how it's kind of maybe altered the way that we look at this thesis about AI that has been kind of driving the market over these last couple of years. What did you make of what so many of us learned this week? How does it change the narrative or the AI theme for you?
So I'd say that it doesn't change the theme for me, but it definitely was an aha moment for a lot of people. Just this idea that, AI doesn't have to be everything to everybody, and it can actually be more compartmentalized. And there's just going to be a lot of ways that it develops and mutates as a theme. So I think even though we weren't aware of DeepSeek, as somebody who loves technology and really sort of thinks that innovation is something that comes and starts and stops, this was just sort of a next step of sort of innovations and aha moments. So I think we're just going to keep seeing that narrative continue and just morph over time. So not surprising.
INGO, that's the Bloomberg Index browser, looks at fixed income returns. I mean, here in the month of January, I got green on the screen here for fixed income, actually making some return for investors led by corporate high yield at 1.37% gain so far year to date. Katie, how do you think about fixed income vis-a-vis other opportunities out there?
So fixed income, we sort of traditionally as trend followers have, the ability to go short fixed income. So we have been definitely, puzzled a little bit recently in that you've seen two very different narratives in fixed income. There's this great opportunity with higher yields and sort of locking those in. And I do think in the short term, there are opportunities there for that. In terms of the long-term trajectory, we have to figure out where the yield curve is going. So we are still seeing short signals in fixed income, which is more of a narrative of long-term, we have to figure out how much inflation is baked into new policy. Whereas short-term, I do think there are opportunities to capture yield and sort of yields that we haven't seen that can really sort of boost your portfolio.
The latest inflation story and the Fed's fight against it is kind of an epic. And here we are in the latest episode of it. And we're going to get new data this morning, core PCE. Where are we in that story as you see it, as you listen to what the Fed chair had to say this week about stepping back, not rushing into doing more? What is your sense of the weight that inflation is going to have on this market in the months ahead?
So I think the challenge with inflation is the question of the timeline. And so I think most investors, when they think about the shorter term, things look pretty good for things to be stable in terms of inflation numbers, and that has come out in the data. Although inflation has been stickier than many would have hoped for quite some time. I think the real wild card is how do changes in policy and people's expectations for inflation long term digest some of the potential for inflation with spending. So that's where you see this sort of dichotomy of people in the short term thinking it's looking good. We might have, lower rates, but not too soon. But longer term, the questions are much bigger. And so I think that's why it's definitely a volatile trade. And it's also, there's a lot of varied opinions right now.
Katie, part of the Trump trade, I guess, that kind of really started to take aim kind of late September, early October, and it looked like President Trump was trending better. One of those was just long the U.S. dollar. And sure enough, the dollar rallied 7-8%, but it's maybe given up a little bit just in the last several weeks. What's your dollar view at this point?
So the dollar has been the strongest trend from sort of a price-based measurements that we look at. And it's really sort of profited from multiple avenues. And I think particularly sort of this U.S. dominance theme has been one that's been very accretive to the dollar. And also just the fact that the Fed has been sort of more cautious has also been keeping the dollar in relative sense in a strong position. Look at what happened this week. The ECB cut rates. So you're seeing this, sort of asynchronous policy across currencies, and I think that that has really sort of kept the dollar as a leading trend. And I've been really impressed how long it's held on and how it's come back even when it's sort of reverted.
Focusing so much here on what happens with these tariffs, if they're implemented, how big they're going to be, how wide they're going to be. I'm struck by how, as much as there is kind of increasing nervousness among analysts and observers of Canada, Mexico, the United States, and the relation between all those three countries, we haven't really seen it manifest in the markets that much. So picking up on what you were just talking about and what Paul asked about, how do you see the effects of those punitive tariffs, if put in place, on FX and kind of on markets broadly?
So this is a hard question because there's a lot of talk, but we need to see what that means in practice. And I think that's why the market perhaps hasn't shown as much of that reaction. We do see that reaction, though, in the commodities. If you look in the commodity sectors that we follow, gold has gone to really all-time highs. It's really sort of gone up a lot recently. And that I would connect to that inflation theme of tariffs potentially being inflationary. We've also seen commodities rising more recently, and we've seen sort of a lot of volatility around the discussions of tariffs. So I'd say the best place to start looking at that reaction is going to be there. But eventually, as we have more clarity, I think it will also affect the equity markets and other markets as well once that becomes more clear.
Katie, about 10, 11 years ago, you co-authored the book entitled Trend Following with Managed Futures, The Search for Crisis Alpha. And, of course, we're all waiting the Netflix rendering of that coming up. What's the trend you and your colleagues are following here in 2025?
So the biggest trend we're following, I'll talk about two things. One, the biggest trends we're following, but the things that I worry about, because maybe that's, what trend followers do. We're looking for that next crisis. So the trends we are following that have been the most interesting has been this U.S. dominance theme. It is really clear in the data, and you've seen the U.S. dollar being sort of the pivot point of that. I've also seen very mixed trends in fixed income, which has caused me to sort of understand that there's differentiating themes across short-term and long-term horizons. But I think the asset class that I'm the most concerned about is definitely fixed income. And it's that fixed income is one of the only places, if inflation is an actual problem, where that can easily be priced in and put pressure on markets. So I think that is sort of the concern that we think about this year going forward, and or the return of some inflationary moves, particularly in the commodity markets, is something we've been watching as well. So they're not here, but we're always looking for what is that disruptive trend that could really sort of change things. And those are the things I'm thinking about.
If you'll indulge me, let me close with a question about metals. So kind of sticking with commodities here, but I was on TV yesterday when we saw spot gold hit a new high, and we've seen that trade doing pretty well, I guess, against this concern about inflation generally, and certainly the potentially inflationary facets of the president's protectionist policies. How are you looking at gold? How are you looking at precious metals these days?
So it's been an interesting one because it's been a focal point in the market as a pivot point to reflect concern. And you've seen that accelerate, especially around periods where people get concerned about inflation. That happened last year in March, April, and we're seeing it again now. We did see it, revert as well. Some of the signals that we're measuring around sort of the election. So that was something that kind of reverted. So there's definitely a lot of speculation on gold. So we'll have to watch how that develops. But really sort of gold has been a pretty straight trend, and it's been relatively strongly linked to the inflation narrative. So something to follow, at least for now.
Mike McGlone, Bloomberg Intelligence commodity strategist, I think 4 or 5 years ago, I said, hey, Mike, what's your commodities call? Buy gold, short everything else. Okay, I got that. Katie Kaminsky, thank you so much for that. We appreciate it. Katie Kaminsky, she's a chief research strategist at Alpha Simplex up there in the Boston area. With our news in New York City, here's Sean Tucker.
All right, gentlemen. Investigators beginning to piece together what happened in Wednesday's mid-air collision between the American Airlines flight and that Army Black Hawk helicopter over the Potomac River in Washington, D.C. All 67 people on both aircraft killed. The airplane's flight data recorder and the cockpit voice recorder have been recovered. The National Transportation Safety Board member Todd Binman says they are starting the process of opening up those recorders.
The voice recorders actually have to be what's called auditioned among a number of people so that there's complete agreement of how the transcript will come out. And we also look for ancillary noises, maybe a boom or a thud or a crack or something in the cockpit.
Inman says in cases of these major investigations, could take a year, if not more, for them to come to a final probable cause. President Trump says he doesn't know exactly what caused the crash, but he says hiring practices within the federal government could have played a role. At a White House press conference, reporters pressed the president why he's singling out diversity, equity, and inclusion in the crash.
I'm trying to figure out how you can come to the conclusion right now that diversity had something to do with this crash.
Because I have common sense.
Well, the president later signed an executive order for the FAA and Transportation Department to review hiring and safety changes under the Biden administration. President Trump poised to unleash his first wave of tariffs Saturday, sending foreign governments and businesses rushing to skirt potential duties and prepare for retaliation. The targets are unlikely ones: Canada and Mexico, the two biggest buyers of U.S. goods. The president has pledged 25% tariffs on about $900 billion in goods from both nations. And here's something to think about. The next time you pass up a work of art at a yard sale, experts now think a painting that was purchased at a garage sale in Minnesota for $50 is a genuine work by Vincent van Gogh.
Wow.
Or if you're David, you pronounce it Van Gogh.
Oh, thank you.
The
I was going to
conclusion, coming after 4 years of investigation into the painting of a fisherman, the painting still needs to be attributed to him by the Van Gogh Museum in Amsterdam. If confirmed,
here are the tissues, Paul, if you'd have passed those over to our friend John Tucker.
Could be worth about $15 million. Global news 24 hours a day. When you want it with Bloomberg News Now, I'm John Tucker, and this is Bloomberg. And let's get a markets update with Lisa Mateo.
Why does that never happen to me at a garage sale? Come on. We've got this business flash brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. All right, we've got NASDAQ futures leading the gain. This is as big tech earnings really been front and center all week. Now, we talked about Apple, Intel. Next week, can't forget Alphabet. Amazon, they open their books, and we have NVIDIA reporting on February 26th. We are also moments away from more economic data. We have the Fed's preferred inflation gauge in just a few moments, so stay tuned for that. We'll go to NASDAQ futures up 0.7%, 165 points. Dow futures up 0.2%, 126 points. And S&P futures up 0.4%, or 27 points. I'll have to turn to commodities because gold rose to a record high. COMEX gold, $2,845 an ounce. And we have the Bloomberg Dollar Spot Index up about 0.1%. Shares of Novartis, they're up. The ADR is up about 2%. It said its forecast operating profit will grow by high single to low double digits. And then you have shares of Walgreens. They're down about 11%. It said it's going to suspend its quarterly dividend, saying it needs cash to deal with litigation and also turnaround efforts. For on-demand news 24 hours a day, you can subscribe to Bloomberg News Now wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. David and Paul.
All right, Lisa Mateo, thank you so much. We appreciate it. David Gura sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Brokers studio in New York City. We are streaming live on YouTube. That would be the intraweb. Head over to youtube.com, search Bloomberg Podcast Live. I have to spell that out for our next guest.
Thank you so much. Yes, he doesn't know.
A little bit of a Luddite here. Lisa was talking about a lot of tech earnings this weekend. Next, remember Monday, all the way back to Monday, the world was rocked by this DeepSeek thing. It seems like a lifetime ago.
A lifetime ago, and an incredibly busy day for our next guest, who I think was on every hour of the day.
Exactly. Mandeep
Often
Singh,
multiple times.
Exactly. Mandeep Singh, senior analyst. He covers the technology space for Bloomberg Intelligence. Mandeep, a lot of earnings. Let's go back. One of the names we didn't get to talk about, I don't think at the time, was Meta. They put out some pretty solid numbers. The stock is performing really well. What's the story at Meta?
I mean, look, this is a company that dominates the social media ad space, growing top line at over 20%, and putting a lot of dollars in CapEx, and the street seems to appreciate it despite the DeepSeek news, which was a surprising part. I mean, they're actually taking their OpEx guide up as well, and CapEx they raised prior to the DeepSeek news. And for me, the real comparison here is with Microsoft. Microsoft, if you read the tea leaves, hinted that this is the year of peak capex, that they acknowledged the DeepSeek development, and they said they probably are thinking of, taking down costs, although they didn't guide to it. Whereas Meta was like, this is going to drive more demand for AI on the inferencing side. And so we are doubling down. I mean, they actually raised their OPEX guide, which did surprise a lot of people relative to consensus.
Top of the earnings report, Mark Zuckerberg, CEO of Meta, founder, of course. We continue to make good progress on AI, glasses, and the future of social media. I'm excited to see these efforts scale further in 2025. Are you likewise excited about glasses and AI in the context of Meta?
The one line that stood out for me was, this is a make or break year for Reality Labs.
Okay.
What it tells you
They
is...
pour a lot of money into Reality Labs.
And they're still going to lose another $20 billion this year. So imagine how high the stock would be if you put even a 15 times multiple on that $20 billion that they're losing. I mean, the stock would be easily 10% higher. But the fact that he said this is make or break year, which means this is not going to be a recurring loss. So awesome. Either this year this thing takes off, or they're going to stop investing $20 billion. And I think so that's a positive for the market.
Google, they report earnings, I think, Tuesday. What do you expect to hear from them?
I mean, the ad trends seem to be solid. That's what Meta alluded to. Probably, I think both Meta and Google benefited from the TikTok uncertainty. Clearly, the ad dollars are moving away from TikTok as a platform. And I think YouTube should show an acceleration in growth. So search is where, everyone is kind of cynical about Google maintaining their 90% search share.
So how do you think that plays out? I mean, is AI, ChatGPT, and what is it when I go on my Google thing? It comes up as
Gemini?
Gemini.
Yeah.
Is that a thing?
Look, I mean, in the end, the search market is expanding. Because of generative AI, we will be searching for more things because the prompts are all over the place. So instead of going to google.com, there are prompts everywhere where we can do searches. Now, Google's problem is they have the 90% plus share. So I think volume-wise, there will be an impact on Google search. But what really is the big moat for Google is the fact that they monetize, just 20 to 30% of their queries. The rest are all free. And they somehow have a way to combine all their family of apps data, whether it's Gmail, Maps, all the other apps, and show you the most relevant ad, which is why, their ad pricing is way above everyone else. To my mind, that is a moat that's hard to break. All these, LLM offerings are subscription-based. Nobody is really penetrating or hurting them on the ad side. Maybe Meta. Meta said they will get into search via their WhatsApp platform. So Meta could be a competitor in search ad dollars, but everyone else so far is kind of going with the subscription offering when it comes to LLM searches.
The extraordinary ubiquity of Google search is not new to anybody who has a phone or a computer, but situated for us in this moment where we have a new administration, 2 weeks in. Looming large is this Department of Justice case against Google, speculation about Chrome being spun off. What happens to all of that? How do you see that? How does the company see that in the context of this new administration?
So you're right. If there is one big risk out there, it's that Department of Justice case to divest Chrome. And if that happens, I mean, we're talking about an easy 10-15% hit on search ad revenue.
Yeah.
Because in the end, on the desktop, they are getting a lot of data through the Chrome browser, even though they're not charging for it. I mean, that's why the search is so effective. So it will hurt them. Now, our base case is, the Department of Justice will see the competition now for search. And there's no way you can say Google is a monopoly. I mean, look at all the competition we were just talking about from LLM players. And so from that perspective, it's hard to argue, even though they may have had a monopoly in search, but it's hard to argue they have it now and going forward, given all the competition. So there will be some remedies. Probably the one that Google has suggested from their side, now I don't know if the judge will accept or not, is the exclusive arrangements they have with Apple to be the default platform and the payments they make to Apple and Samsung. Maybe that goes away. But actually that could help Google because when it becomes a bidding mechanism, no one else is going to bid $20 billion to be that default search. And so Google will still be the default search and the $20 billion could be all gross margin.
Interesting.
All right, we've all had roughly 4 or 5 days to digest this DeepSeek data that broke last weekend. My amateur take is maybe a headwind for chip makers who sell all this stuff, but maybe a net positive for everybody else. How do you view it? Somebody asked me at a cocktail party tonight. That's what I'm going with.
Yes, I think that's a good take. The semiconductor guys should be worried, especially on the training side. If you were betting on scaling laws and data centers getting bigger and bigger, you needed more power, you have to rethink what happens now with DeepSeek talking about efficiency and gains of almost 30 times compared to what the pricing was with the prior kind of set of LLMs. But look, I think the biggest beneficiaries here are the software companies. There is no doubt that cheaper LLMs helps their margin, and that's why all the software companies, the cloud guys that want to integrate this LLM technology as an agent, they are the biggest beneficiaries. And we saw a nice bid up this week on the cloud software names.
All right. This was a big week for tech. I mean, this DeepSeek thing, I mean, it changed kind of a little bit of the narrative of this AI thing, and it's just not straight and up and to the right. You got to manage some changes here. Mandeep Singh, thank you so much for joining us. Mandeep Singh, senior analyst technology, Bloomberg Intelligence, actually coming into the office on a Friday, unlike his BI management team, which mails it in regularly. Mandeep Singh, we appreciate that. We're going to have the opening in just a few moments. But again, you think about Monday and kind of the seismic shift for a lot of people to said, oh, maybe this AI theory that I have that's been underpinning not just the tech space, but the market overall over the last 2+ years, maybe I need to rethink that a little bit.
And something I talked about with Mandeep at the beginning of the week, which I'd love to talk to him more about, is just sort of when we're going to figure out what exactly this DeepSeek is, how it came about, we have this paper from them, we have some insights from the company itself, but there is this process now by which we and other reporters and companies are going to be kind of studying the model to see, did they do what they said they did, and did it really cost $5 or $6 million? And I think the jury's still out.
Yep,
still out on that.
Yeah, exactly right. So, but I'll remember back to Monday, Nvidia off 17% is something north of $560 billion.
Not a good day for Jensen Huang.
Yeah, exactly. All right, we got a big 8:30 a.m. today. We have some economic data that's crossing the tape. Personal income, PCE, core PCE. That is really a key issue here for the Fed's fight against inflation. So we're going to bring that up to you in just moments. This is Bloomberg.
This is breaking news from Bloomberg.
All right, right now we got some breaking news coming across economic data. Let's go to Lisa Mateo.
All right, so we'll start their PCE price index. We'll go year to year. This is for December. So the expectation was for 2.6%. Still waiting on that right now. So we'll go to core PCE price index year to year. So for December, it was 2.8%. As we wait for that and it still comes in, we want to hit personal income for December. So the expectation was for 0.4%. Came in on target, 0.4%. We go to personal spending for December. That survey was for about 0.5%. It came in about 0.7%. And now we'll hit the other numbers. So we'll go to PCE price index for month over month, and that was for 0.3%. Came in at 0.3%. We'll continue to follow the markets for you. We see the reaction, not too much right now. We have NASDAQ futures still up about 0.7%, 160 points. We have Dow futures up 0.2%, 127 points, and S&P futures up 0.4%, or 26 points. I want to go back because now the rest of the figures are coming in. We'll get to the PCE price index for year over year December. 2.6%. That was a survey, came in right on target. Then we go to core PCE year over year. That expectation, 2.8%, came in right on target, guys. So it looks like it's right about on target for core PCE.
Bullseye.
Bullseye. Very good. Lisa Mateo, thank you so much. We appreciate that. Those economic indicators are brought to you by Oppenheimer. Oppenheimer focuses the power of their thinking on you, creating customized plans to help achieve your goals. Put the power of Oppenheimer thinking into your investing, wealth management, capital markets, investment banking. Again, as Lisa was just reporting, the economic data, the inflation data, kind of coming right in line with expectations. 10-year Treasury up 1 basis point, 4.53%. Let's check in with Ira Jersey, Chief U.S. Interest Rate Strategist for Bloomberg Intelligence. Ira, any takeaways here from some of this inflation data?
Well, so I would say two things here, Paul. Number one, we knew what this was going to be, mainly because we got the GDP report yesterday, which included the December data. So unless there were massive revisions to October and November, this number was always going to be pretty close to expectations by economists who just, basically just did the arithmetic on a spreadsheet. I think the important number here, and I think this is a key for the overall economy, is this personal spending number, 0.7% above expectations. Just shows that the U.S. consumer continues to drive this economy, and we continue to have pretty good economic growth in large part because the people aren't retrenching their spending yet. And as long as that happens, you're not likely to see a very big rally in Treasury market, and the Federal Reserve, like Jay Powell said on Wednesday, could be patient and not in a hurry to cut interest rates further.
Just picking up on something that Greg Dacco said to us a few minutes ago, that there is kind of a lot of pressure now on consumers at the lower end of the income spectrum. As you look at that personal spending number, what does it tell you about the health of the consumer, about that narrative that we're seeing this kind of bifurcated economy when it comes to the consumer in this country?
Well, I haven't had a chance to dig into the data, right? It only came out like a minute and a half ago.
You're only that good, Ira.
and I don't get a lockup, so I can't give you the details on the breakdown of who's actually spending, but clearly that's true, right? Where lower income households who have to spend more on food and other necessities are going to be more crimped than the middle class to higher income earners. But what this does tell you is that those people with money are not afraid to spend it, right? And I think that's the kind of been the overall story really for the last 3 years. And we've all expected, and there were different periods of time when everyone has expected the U.S. consumer to retrench a little bit, maybe increase savings, spend less money on services and not do all these experiences that they want to do. But they just keep on going. And if you look at, like, Jody Lowry and I were talking about this just yesterday, people are still willing to go out and spend on vacation. Like, people are still willing to spend on these experiences, and services spending has continued to be one of the bright spots and really driving the economy. And the important thing about that, in my view, is that a lot of those experiences and services that we look at, they're not all particularly sensitive to interest rates. And that means that, is the Fed restrictive? Maybe not, because interest rates just don't matter to a lot of these sectors.
Yep. Very interesting. Ira Jersey, thank you so much for joining us. Ira Jersey, he is the chief U.S. interest rate strategist for Bloomberg Intelligence. Luckily, it was a soccer-free discussion.
Yes, and he can dig into those data. I feel bad I asked him to dive deep, but he's got the time now.
Come on, he's a player. He knows what's going on. We'll look at that here. I'm again looking at the yield space here. Not a whole lot of movement. 10-year Treasury up about 2 basis points, 4.53% on your 10-year U.S. Treasury. We'll have more coming up. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures still higher. This is after more economic data came in. PCE price index, core PCE, well, they came in on target with estimates. But as Ira Jersey was just saying, that standout piece of data was personal spending, came in higher than expected, kind of in line with the data we received yesterday. NASDAQ futures still leading the way this morning. That's tech. A big part of it is thanks to tech. We have Apple shares up 4%. And NASDAQ futures up 0.7%, 159 points. S&P futures up 0.4%. Dow futures up 0.2%. 0.3%, 119 points. The 2-year yield, 4.21%, little change, and the yield on the 10-year, 4.53%, and that's up 1 basis point. The Bloomberg Dollar Spot Index up about 0.1%, and can't forget Bitcoin. There you go, down about 0.3% at just over 104,000. Few companies making news. We have Chinese AI startup DeepSeek. Sources saying U.S. officials investigating whether it bought advanced NVIDIA chips through third parties in Singapore. Then we'll stick with AI. We'll go to the Wall Street Journal reporting that OpenAI in talks to raise up to $40 billion. It's a funding round that would value the company about $340 billion. We have shares of Samsung. They're down about 2% in South Korea. That's because its chip division reported a smaller than expected profit. And then finally this out, job cuts could be coming to chipmaker ST Microelectronics. Sources say considering reducing its workforce by as much as 6%. It could affect 2,000 to 3,000 workers in Italy and France. Its ADR is down about 1%. That is your Bloomberg Business Flash. David and Paul.
All right, Lisa Mateo, thank you so much. We appreciate that. David Gura sitting in for Tom Keene here this morning. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker studio, and we're also streaming live on YouTube. So head over to youtube.com and search Bloomberg Podcast Live. So, David, I have finished season 1 of the TV show Landman, so I am now a verified expert on oil and gas. So I am ready for our next guest here. Alex Steele rolls her eyes when I say that.
Yeah.
She's actually really an
She
expert.
watched the show? I haven't asked her.
No, but I'm trying to get her to. It's below her, but I'm saying, hey,
too basic.
Everything I know about oil and gas, I learned from that show. Dr. Amrita Sen, a real expert. She's the founder and director of research at Energy Aspects. Dr. Sen, tariffs. A lot of industries, a lot of companies are really paying close attention to President Trump this weekend and kind of what moves he may make on tariffs. I'm guessing that is also true in the global energy business. How do you guys think about that?
So firstly, I do watch Landman. It's a great show.
Oh, wow.
I think
all
one
right.
of the best ones on oil and gas. I'm fully caught up with season 1. I think it's 10 episodes, and I'm waiting for the next one. But
yes.
Anyway, in terms of tariffs, look, I think it's going to be very, very volatile. We saw that yesterday. If you look at the volume that went through in crude as he was doing the press conference, first he said, I'm definitely going to come up with tariffs on Saturday. Then he said, oil's going to be, kind of said, oil's going to be exempt. Then he said, oil's not going to be exempt. I mean, the volatility that we have to deal with under this precedent is going to be very, very high. I think the market's getting used to it. In terms of the impact, let's be very clear. If the U.S. goes ahead with the 25% tariffs on Canadian and Mexican energy, or everything, for instance, and you get Mexico in particular, and Canada as well, retaliate, it is going to be devastating for U.S. refining. We have put out a note already, and then more detailed pieces coming out. We could lose almost 1 million barrels per day of refinery runs. 800,000 is our number, because PADD 2 refiners will face higher costs of Canadian crude, even if Canadian crude is the one that discounts mostly to absorb the tariff. And the bigger one is U.S. Gulf Coast refiners are pretty much like solely, not solely, but largely dependent on Mexico to clear their products. So if Mexico retaliates with tariffs, the U.S. Gulf Coast won't have alternative homes. They send 850,000 barrels per day of products to Mexico.
Wow. Referring to the Gulf of Mexico there, which may be renamed the Gulf of America, I gather, if we are to believe this
Everybody's got to change the map.
Amrita, let me ask you about the rhetoric that we heard from President Trump when he was in Davos, basically encouraging or demanding that OPEC and other nations push down the price of oil. How are other producers watching the kind of delicate dance, the uncertainty that you were just describing when it comes to these tariffs? Are they just kind of sitting back like the rest of us are, or are they kind of making plans to pivot in some way if those tariffs do in fact go into place?
I mean, tariffs is one thing. I would say more broadly, OPEC Plus members really remember what happened in 2018 when President Trump had said, we're not going to give any waivers to Iran, had forced a couple of OPEC members to raise production preemptively. And when prices were at $86, he did give waivers, and then prices collapsed to $55. They also remember in 22 when the Biden administration talked about very steep sanctions on Russia, never really enforced them, and instead they released crude from the Strategic Petroleum Reserve, and again we had the big correction in oil prices. So I think it's been very clear, and I've been in the region in Riyadh as well twice in the last 2 months. Very clear message is that we're not going to preempt anything. We need to watch what is actually happening. The decision of OPEC Plus. It's not just, GCC countries, but the 8 members together relies entirely on oil market fundamentals, and that's where tariffs do come in. Canada and Mexico tariffs, of course, has a huge impact on U.S. It's going to be bullish for rest of the world refining, bearish for U.S. refining. But if there are Chinese tariffs, that's bearish potentially for global growth. So they are watching that. They continue to say that demand is, not great. So why should we start bringing back barrels in a market that may not require it?
So you mentioned China there. What is the latest call in your energy world, your global energy world, Dr. Sen, about China and demand from China, maybe in the next year or so?
We've got Chinese demand recovering a little bit this year on oil. Last year was declining year on year for the first time ever, really. This year we should get a bit of a growth just because the economy is doing better. I was there 2 weeks ago. Definitely sentiment looks better than last year, but let's just be very clear. Gone are the days of China growing at 1 million barrels per day in oil. Gas is still growing. Obviously, they're doing a huge push towards green energy, nuclear. Oil is more of a small growth and steady growth story going forward, but the economy is still, it's nowhere close to peak growth story. There's still a lot of pockets of weakness. They're sifting through that, but I think it'll take some time.
So the secret here, Paul, is I have to take flights to Riyadh and Beijing to get the landman mass binging.
I'm just going to the West Texas to oil patch.
Amrita, we haven't talked much about the sanctions that have been put in place, first by the Biden administration and now this one. Just very quickly here, how do you see those continuing or becoming more draconian here in the weeks to come?
I think it really depends on who the personnel that get appointed by the Trump administration to see if they actually enforce it. The sanctions the Biden administration did were pretty significant, probably the most significant we've seen on Russian energy. We've seen disruptions to Asia. Flows have reduced to China, somewhat to India, scared of secondary sanctions, and banks in particular are making it quite hard. But workarounds are already emerging, so enforcement will be key.
All right, Dr. Amrita Sen, thank you so much. We appreciate that. Dr. Amrita Sen, founder and director of research and energy aspects with our news in New York City. Here's John Tucker.
Let me just break this news for you. Just crossing the Bloomberg right now. The CEO of NVIDIA is scheduled to meet with Donald Trump today. No other details. We'll bring them as soon as we get them. Note survivors in the collision between that American Eagle Flight 5342 and that Army Black Hawk helicopter near Reagan National Airport. Todd Inman with the National Transportation Safety Board says crews are still pulling victims from the Potomac River.
We're still in a recovery mode, first and foremost, to get the perishable evidence and specifically the bodies out. Once we get a little bit closer into that, we'll be able to better understand the dynamics of what may have happened upon impact.
Both black boxes for the American Eagle flight have now been recovered. Tulsi Gabbard, President Trump's pick to be Director of National Intelligence, faced questions with the Senate Intelligence Committee, many centered on what critics see as her shifting positions on the intelligence collection and statements sympathetic to Russia. More on the story in this report from Bloomberg's Amy Morris.
Several lawmakers focused on Gabbard's support for NSA whistleblower Edward Snowden, who leaked classified documents, then fled to Russia, where he's now a citizen. Democratic Senator Michael Bennet of Colorado.
Is Edward Snowden a traitor to the United States of America?
As someone who has worn our uniform in combat, I understand how critical our national security
Apparently
is.
You don't.
Gabbard's nomination is not certain, with many Republicans declining to declare their support, and Democrats criticizing her for appearing sympathetic toward authoritarians like Russia's Vladimir Putin and Syria's Bashar al-Assad. In Washington, Amy Morris, Bloomberg Radio.
And Vertex Pharmaceuticals has gained U.S. approval for the first new type of painkiller in more than 2 decades. This paves the way for a safer alternative to addictive opioids that have been linked to hundreds of thousands of deaths. Vertex's pill gained FDA approval to treat moderate to severe and acute pain. The wholesale acquisition cost for the twice-daily medicine is set at $15.50 per tablet. And global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm John Tucker, and this is Bloomberg. David, Paul, and Lisa.
John Tucker, thank you so much. We appreciate it. One of the great rivalries in college sports, Duke, North Carolina basketball. Carolina at Duke.
At Cameron.
Tomorrow,
6:30 p.m.
I don't see a line. I'm sure it's 13 or 14 points Duke favored. Carolina's a little down this year, but I'll watch it nonetheless. This is Bloomberg.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
I'd be delighted to go see him.
Have you been invited?
Not yet, but I would be delighted to go see him and congratulate him and do everything we can to help this administration succeed.
That was Jensen Huang, CEO of NVIDIA, speaking with Bloomberg's Ed Ludlow at the CES show in Vegas on January 7th. Let's get the latest reporting on a potential meeting between the NVIDIA CEO and President Trump. Josh Wingrove joins us, White House reporter for Bloomberg News. Josh, how did this come about here, and what's kind of the agenda, do you think?
Yeah, it's a bit unclear, but Trump has been meeting, of course, many big figures in business during the transition. Some of them, of course, attended his inauguration. And the background here is really the future of what U.S. chip policy will be. Trump has pledged new tariffs. We don't know at what scale or when they'll come in. Biden had actually handed off a potential investigation that could tee up tariffs on legacy chips to him that Trump could pick up. But there's sort of questions swirling also about the future of the Chips and Science Act, that bipartisan bill passed under the Biden administration. Trump is sort of hemmed and hawed over that. He thinks essentially direct subsidies are maybe not the way to go. He stopped short of really, saying he'd backtrack on it. Lutnick, his incoming pick for Commerce Secretary, assuming he gets approved by the Senate, sure seems like he will, also danced around the issue in his confirmation hearing this week, sort of saying he was going to try to find the best bargain for taxpayers in that and signaling he would not seek additional chips funding. So Trump has essentially been cool to the idea of subsidizing the chip sector, but warm to the idea of erecting new tariff walls, and how NVIDIA fits into that, of course, is the big question. And then the other big question is whether they'll talk about DeepSeek, right? And this question about, did they have access to chips that were somehow outside of export controls? There's some reporting that the U.S. officials are looking into that.
Yes, dovetailing your reporting with that of Jenny Leonard and her colleagues, looking at whether or not DeepSeek was able to get those chips under cloak and dagger, I suppose. Josh, let me pivot, if I could, just to ask you about the goings-on in your home country, in Canada, as we kind of count down the hours until we may see new punitive tariffs put in place on Canada, on Mexico as well. We know that the president's going to make his way down to South Florida this afternoon, this evening. Are you expecting that come tomorrow morning, I don't know if at the stroke of midnight or shortly thereafter, we're going to see those 25% tariffs put in place?
Yeah, did I say house or a boot? Did I give it away? The Canadian. Let me know what the triggers are. He says it's coming. One thing we don't know today is he said last night they would meet on whether to exclude Canadian oil. Now, the reason Trump is a believer in tariffs. Anyone who thinks otherwise is kidding themselves. But the question on the oil price is a big one. The Canadian oil is the top source of U.S. oil imports, of course. Putting a tariff on, a 25% tariff on it, would have a big impact on gasoline prices, in particular the Midwest. And even if he doesn't, that might still happen because the Canadians are considering an export tariff. In other words, they say, if you want to start a tariff fight, we're not going to take oil off the table. You're going to deal with the higher oil prices until that tariff fight resolves. So it's kind of a moot question, potentially, if he does agree to try to exempt oil and the Canadians do go forward as they've mulled with an export tariff. But overall, right now, he says it's happening. He says that the Canadians and Mexicans have not done enough on the border. Both countries have done stuff to try to respond to his concerns on the border. It's just not clear, they're sort of fumbling around the room in the dark, trying to figure out what he wants on this. And the background to this as well, we heard this morning from Peter Navarro, one of Trump's trade advisors and definitely a hawk on tariffs. He told CNBC in a hit this morning that there's a revenue aspect to this, right? We got Republicans gearing up to extend some of those tax cuts, potentially enact new ones, such as Trump's pledge for no tax on tips. He needs money, and Trump thinks tariffs is a good way to get that.
Moot rhymes with a boot.
Yes.
Yeah. Okay.
That's right. Exactly. That's right. That's how to remember it. Good.
All right, Josh. Great stuff. Josh Wingrove, he's White House reporter for Bloomberg News, giving us the latest on some reporting this morning that Huawei CEO Jensen Huang scheduled to meet with President Trump today. And as Josh was saying, just a long line of corporate CEOs.
But a parade of plutocrats, billionaires making their way to meet with the president. But again, the kind of coloring this is what we saw at the beginning of the week with DeepSeek. So fascinating to kind of see what the dynamics will be in that meeting.
Exactly. And certainly tariffs will be on the agenda, one would think. Again, February 1st, tomorrow, is expected when, if there's going to be some tariffs, they could occur as soon as that. All right, futures, 28 points higher on the S&P 500. That's a 0.5%. We'll have more coming up. This is Bloomberg.
Bloomberg Surveillance with Tom Keene and Paul Sweeney.
I'm sorry, it's a boom economy, and that's what we're adjusting to.
Neither party seems to want to take on deficits at all.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
All right, coming up in this hour, we're going to check in with Margaret Brennan, host of CBS's Face the Nation, preview what they're going to talk about on Sunday. No shortage of topics, I am sure. Simona Mocuta, chief economist at State Street Bank, is going to join us as well, get her thoughts on some of this economic data we've seen here and maybe what the Fed is going to do going forward. We're going to finish up the hour because we got a Super Bowl coming up in a little more than a week, and people bet on this thing, David, and they bet big. And they bet more and more every year because you have more and more states allowing sports betting. Do it right on your phone. Brian Egger, he follows all the gaming companies, the casinos, hotels. He's going to join us to tell us how big.
And I should say this game taking place in a city where there is, a fair amount of casinos and some in-person gambling as well. Eager to hear who will do what.
Yeah, so this year it's in New Orleans. Last year it was in Vegas.
There you go.
So there you go. The tie
Compare the two.
Is complete. All right, we got a lot coming up in this hour. Let's kick it off with a Bloomberg Business Flash. Lisa Mateo.
And we've got NASDAQ futures leading the charge this morning, up about 0.7%, 157 points. S&P futures, they're up 0.4%, 26 points. And we have Dow futures up 0.2%, 115 points. But NASDAQ futures, we have tech, big tech earnings really helping out things. Apple up 3%, chipmaker Intel also up 1%. We also had more economic data out this morning, the core PCE index. Well, it came in right where the Fed expected, 2.8% on a year-over-year basis, up 0.2% in December. Now, labor costs also cooled last month to their slowest pace since 2021. We'll get to the two-year yield, 4.21%, little changed, and the yield on the 10-year, 4.52%, and that is little changed. We have the dollar on the rise. Its best week in 7, set for that, up 0.2% right now. Shares of Colgate-Palmolive will go to earnings, down about 3%. Its CEO said it did deliver another quarter for full-year strong organic sales growth, but its shares again this morning are lower. To oil now, where shares of Exxon, they're up just over 0.5%. It beat earnings estimates. And then we go to Chevron on the flip side, lower, down 1%, raised dividends by 5%, even after profit disappointed as oil slumps. That is your Bloomberg Business Flash. David and Paul.
All right, Lisa Mateo, thank you so much. We appreciate it. David Gura sitting in for Tom Keene here this morning. I'm Paul Sweeney. We're live in our Bloomberg Interactive Broker studio. We're streaming live on YouTube as well. Margaret Brennan, host, Face the Nation, CBS Television Network, Sunday morning. Also heard on Bloomberg Radio Sunday afternoon. Margaret joins us here. Margaret, a very, very difficult week for all of our friends in the Washington, D.C. area and beyond with the plane crash. How do you cover that this weekend on Face the Nation?
Well, it's just stunning because all of us in this area rely on that airport, that the next closest is an hour away in either direction. Either you go to Baltimore or out to Virginia. So national's where you go if you're a commuter in half this town, right? There are a bunch of commuters going back and forth to their districts all the time. It's stunning. It's tragic. And we know because it's so cold here, the recovery operations have been paused a few times. We'll bring you the latest on that, particularly the fact-based reporting of what we know may have contributed to this horrible mistake. Because, of course, as you well know, from the White House podium yesterday, the president made a number of allegations suggesting that the individuals involved weren't qualified for their jobs. At this point, the two pilots that we know of for the Army helicopter, one man and one woman, had thousands of hours logged of experience between them. And at this point, what's been established with air traffic control is that there has been an overburdened problem here in terms of one person being asked to do multiple jobs, something that I think a lot of us in different industries experience these days, and perhaps that contributed to what happened, but we don't know the exact cause yet. And of course, private industry, American Airlines, we're waiting to hear what more they share about what contributed on their end. But this is a developing story, and we'll bring you the latest.
Margaret, I know one of your guests this weekend is a new member of the Senate Finance Committee, a new member at the age of 83. That's Senator Bernie Sanders of Vermont. And I have been struck over the course of these nomination hearings, first with Scott Bessent, who was confirmed as Treasury Secretary, and more recently with Robert F. Kennedy Jr., the role that he's playing on that committee, a loud and powerful voice on that committee. You, I'm sure, saw the exchange that he had with RFK Jr. During that hearing a couple of days ago. What are you going to be asking him about, as it seems like a lot of these nominations have a seemingly sure path to confirmation?
Well, I think wait and see, particularly on the Tulsi Gabbard hearing, was pretty difficult yesterday. So I think there's a new sort of, wait a second, how many votes do we actually have here sense this morning. On RFK, also some vote counting that's still happening there. So while that first batch did essentially sail through, Pete Hegseth by the skin of his teeth, with the vice president having to cast the deciding vote there, narrowest margin ever for a Secretary of Defense. I don't know that it's as clear for Gabbard and RFK Jr. You're right. Bernie Sanders, who will be our guest, the independent who caucuses with the Democrats, is the highest ranking from that side of the aisle on that committee. And so he had two bites of the apple on health and on finance to question RFK Jr. And while they agree on things like making America healthy again, he said RFK's observations on, the obesity epidemic in America are right, and issues with healthcare, for example. He had some contentious exchanges over the failure to commit to the statement that healthcare is a right, and also past money making on vaccine skepticism by RFK. That was really interesting to me. Bernie Sanders did go at him hard on that, but so did a number of other committee members, including the Republican chair, Bill Cassidy, a former medical doctor for 30 years, who was politely but really repeatedly almost begging him to distance himself from his record of vaccine skepticism, saying, hey, I administered the hepatitis B vaccine, and I know from firsthand experience someone's life could be saved for a $50 vaccine versus thousands of dollars of medical care. And he spoke in real world terms about a patient he had cared for. So I think this is going to be harder. Not to say arms won't be twisted in an effective way in the coming days. I think we'll see that perhaps next week.
So what is the feeling within Washington, D.C. these days, Margaret, about the real strength and influence that President Trump has over his Republican Party? It seems, again, looking at some of the confirmation hearings, look at some of the performances at the podium yesterday and that press conference, seems to be in very firm control of his party.
Oh, I wouldn't doubt he's in control of his party. He absolutely is. There is fear. There is taking a knee across the board. What we are seeing is a testing, though, now of the separation of powers part. And I think that's a really fascinating thing to watch when we look at these vote counts, because right now, President Trump is not just saying he wants to challenge the system. He's challenging the entire premise of our government in terms of separation of powers with the judicial and the legal branches. Whether it's the birthright citizenship, want to argue over what the Constitution says and the 14th Amendment, or whether it's on the power of the purse, really trying to get at and challenge that fact that it's the legislative branch that has that power, not the executive. No matter how many executive orders you sign, if you want the money for it, you still got to go to Congress. So he's challenging that. And so this is sort of a watch this developing story, because the advise and consent role is what Senate's supposed to do. And so far it's just been consent. And we will see. On some of these harder cases, it was really hard for Senator Langford, for example, when he walked out of that hearing with Tulsi Gabbard yesterday, and he was stunned that she wouldn't call Edward Snowden a national security risk. That was a layup. He knew that she knew she had to say something in order to gain the confidence that she could run the intelligence agencies that Edward Snowden stole intelligence from. And that's going to be hard, but perhaps those difficulties will be swallowed.
Margaret, very quickly here, landing in my inbox this morning, as I'm sure it landed in yours, is notification that Secretary of State Marco Rubio traveling to Panama, El Salvador, Costa Rica, Guatemala, and the Dominican Republic from February 1st through 6th. They're serious about this Panama thing, aren't they?
Well, Panama's on... The Panama thing, if you listen to what the Secretary of State said in that interview he gave, his first interview to podcaster Megyn Kelly, he was speaking in sort of a different fashion than Donald Trump is as candidate and president. It wasn't, we're going to seize back the Panama Canal. It was more, Well, I don't like the fact that there are Hong Kong-based companies that control, entry points to the Panama Canal, and I'm going to go there and talk to them about it as a diplomat. But with the leverage implied, right, that Donald Trump will do something to you if you don't agree with the diplomacy. So we're watching that space, but Panama also very important because of migration to the United States. So Secretary of State Rubio will be launching this first trip through Latin America. That in and of itself is a really fascinating choice in terms of priorities. You usually see Europe, you usually see the Mideast or Asia as a statement of intent with that first trip. This time, America's backyard.
Margaret Brennan, thank you so much. We appreciate that. Margaret Brennan, she's the host of Face the Nation. You can see that this Sunday morning on the CBS television network. You can hear Margaret Brennan this weekend on Bloomberg Radio. Listen to Face the Nation Sunday at 2 p.m. in New York, Washington, D.C., and Bloomberg 92.9 FM in Boston. That's Face the Nation this Sunday at 2 on Bloomberg Radio. Let's go back to the economy, folks. We had some economic data out today. We had a lot of economic data coming out really this week, and today is really focusing on inflation. That seems to be in check. Simona Mocuta, she is a chief economist at State Street. Simona, thanks so much for joining us here. What did you take away from today's inflation data?
Well, first of all, the reaction was a little bit of relief because there is so much reason for anxiety and concern, and so much uncertainty around what's coming through in terms of policy. So it's nice to see that certain things are reliable and progressing along the lines of what had been expected. Even more so, it's not that we had steady core PCE in December, but I think what I'm looking forward to see is the resumption of improvement in January. And what's nice to be able to say is that even if you were to get a really significant month-on-month increase, say the worst since March of last year, you would still on a year-on-year basis see a 2/10 improvement. So we have not been there in a while. In fact, the last time we had an improvement in year-on-year data for core PCE was June. So that is a good start to the year, at least in that regard.
I want to pick up on something that our colleague Ira Jersey brought up, and that is the read that we got this morning on personal spending. I should note it came in at 0.7%. Survey was 0.5. And there's also revision to the last set of data we got. That was revised upward as well. What does that strength, that resilience in personal spending tell you about the strength of the consumer? Yes, and also just sort of how it complicates the Fed's job here going forward.
Yeah, I think this also takes me back to the GDP data we got a couple of days ago. And there was a lot of peculiar behavior in some of the components. One thing that really was striking was this extraordinary strength in consumer spending that, frankly, it's a little hard to reconcile when you look at the behavior of real disposable income, which is not quite as strong. And you've seen that this morning as well. The price of that surge in consumption is a decline in a savings rate. So then you have to ask yourself, you have this strength, but is it truly sustainable? And I would say not at the pace that we've seen over the last in Q4. So something has to give. Maybe we are undercounting, maybe we're under measuring income. That has happened, of course, in the past. But as things stand, there is too much of a divergence between income and spending to be convinced that the spending spree continues.
So some of the inflation data today, again, kind of in line with expectations. Yes, the Fed would probably like to see it come down a little bit, but there are concerns out there that maybe some of President Trump's policies, namely tariffs and immigration reform, will have an inflationary impact, a negative inflationary impact, higher inflation. Do you subscribe to that?
I think directionally, there is no question about it. You are talking, a price shock via tariffs and potentially a negative supply shock to the labor market that could raise wages down the line. Between these two, I would think that tariffs have more of an immediate inflationary impact just by their nature, the ability to impose them on, short notice. But then we have to also remind ourselves that by comparison to other economies, the U.S. is a large, diversified, but actually fairly closed economy, just about 14% of GDP. And we don't know what numbers we are talking about in terms of tariffs. So something that's, reasonably small number, it will not be a true make or break for the inflation pattern. And also, it's important to see what happens to services, right? We are talking tariffs on goods, but that's actually a small part of the economy. What matters even more is what happens to shelter, rent inflation, and there the trend has been favorable over the last few months. I expect that to continue. So, of course, concern about what may happen, but also a little bit of reassurance that you have some offsetting positive developments in the service space.
We have so much uncertainty here when it comes to trade policy. We're waiting to see what's put in place. In fact, if anything will be put in place. We do have more awareness now of the administration's immigration policies, and we've seen the uptick in the way that all of these agencies have gone after immigrants who are in this country without documents. Do you have a better sense now that we have seen that telegraphed through executive orders, as we've seen some action in terms of policy action, that you can kind of think more clearly about the effect that could have on the economy?
Frankly, not a whole lot more clarity than we had a month or two ago. I think what we are seeing is what we sort of expected to see. There will be action on immigration. There will be deportations. But again, as with everything else, the devil's in the details. So what exactly would be the cumulative number we are talking about here? And so because I don't know, I try to also focus on what I do know, which is the reality that the US labor market today is much closer to balance than it was 2 years ago. If these policies were hitting then, I would have expected more of an immediate inflationary effect. Today, you're looking at very low quits rate, very low average weekly hours. So there is this sense that labor resources are not necessarily so intensely utilized. There is no froth in the labor market, and that buys you some time. At the same time, what is the speed of deportations? I don't know. But it will take some time, I think, to truly make a dent in terms of the numbers that we are talking about. If you look at southern border encounters since 2021, 8.8 million, it's going to take a long time to really make a dent in that. So because of that, I still subscribe to the view that short term, I'm more worried about tariffs from an inflation standpoint than immigration action. Medium term, that's a different conversation. And right. I speak to you as an immigrant. We do need them. We do not need those skills. So it does matter very much what happens. But on a 3 to 4 months, even 6 months basis, I think you're right. not really going to see the wage effect.
Simona, thank you so much for joining us. Simona Mocuta, Chief Economist at State Street. Next time, we're going to ask her about what it's like to live in Oradea, Romania. That's where she's from. I just Google mapped it. Yeah. Romania's a big country.
It is a big country.
I've never been there. That's interesting, though. With our news in New York City, here's John Tucker.
And the investigation continues into the deadly crash between the American Eagle jet from Wichita and that Army helicopter near Washington, D.C.'s Reagan National Airport. 64 people were killed aboard Flight 5342. 3 soldiers died in the chopper. Investigators recovered both black boxes from the regional jet. And Bloomberg Danny Lee reports the NTSB is now analyzing them.
These will be very important things to analyze in the days and weeks and potentially months to come. So, yeah, that kind of evidence recovered, but still, many answers and obviously the recriminations from one of the worst air disasters to happen in the U.S. in decades, given it is such a very safe aviation system.
A preliminary report could come from the NTSB within 30 days. The victims of that crash between the American Airlines jet and the Army helicopter included teen figure skaters returning from a national meet with their mothers and coaches, an Ohio college student coming from her grandfather's funeral, 2 Chinese nationals, and a group of hunters headed back from a guided trip in Kansas. The FDA has approved the first new type of painkiller in more than 2 decades. Let's find out more in this report from Bloomberg's Gina Cervetti.
Vertex Pharmaceuticals gained approval for its pain pill to treat moderate to severe acute pain. It paves the way for a safer alternative to addictive opioids that have been linked to hundreds of thousands of deaths. The wholesale acquisition cost for the twice-daily medicine is set at $15.50 per tablet. Vertex's drug has been hailed as a scientific breakthrough because it eases pain without entering the brain, minimizing the risk of addiction. Each year, about 125 million opioid prescriptions prescriptions are written for Americans with pain caused by broken bones, burns, surgeries, and other injuries and procedures. More than 500,000 U.S. deaths were linked to overdoses of the addictive drugs from 1999 through 2019. Gina Cervetti, Bloomberg Radio.
And billionaire Jerry Jones's family, owners of the world's most valuable sports team, the Dallas Cowboys, taking another step beyond football by branching into tennis. The Dallas Open, in partnership with the Cowboys, spiffing itself up with bigger names, a new venue, and a $2.8 million purse. That's more than triple last year's total. Tennis tournament adding a new sport to the Jones portfolio just a few months after he teamed up with Roger Penske on a plan to bring an IndyCar Grand Prix to the streets outside the Cowboys Stadium. The Dallas Open, by the way, is set to begin February 1st. Do they have cheerleaders for tennis?
All right, pick it up here, Paul.
They should.
Yeah. John Tucker, thank you so much. We appreciate that. Speaking of Jerry Jones had a guest role on Landman. And in that, he had about a 4 or 5 minute speech he gave as part of perfect.
Wow.
Unbelievable. And everybody's like, oh, he's a real actor. And what we think happens is he just did it right off the cuff. It just kind of said, there you go. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this futures report sponsored by IBKR. Will the U.S. CPI exceed 2.4% in March 2025? You can trade your prediction with IBKR Forecast Trader. The yes recently at 60%. You can buy yes or no and earn $1 if you're right. Go to IBKR.com/forecast. All right, we've still got NASDAQ futures in the lead, up about 0.6%, 135 points. Big tech earnings really front and center all week. We talked about Apple, Intel. Next week we have Alphabet, Amazon. They open their books, and we have NVIDIA on February 26th. We'll go to S&P futures now, up 0.3%, 19 points. Dow futures up 0.1%, 72 points. The 2-year yield 4.20%, little change, and the yield on the 10-year 4.52%, and that is little change. To commodities, have to point out gold rose to a record high. We have COMEX gold at $2,849 an ounce. Over to oil, Brent crude $76 a barrel, WTI crude $72 a barrel, and the Bloomberg Dollar Spot Index up about 0.3%. We have shares of Walgreens really taking a hit this morning, down 12%. It said it would suspend its quarterly dividend, saying it needs cash to deal with litigation and other things. AbbVie up 6%. Quarterly revenue beat expectations. Sales of newer medicines offset the decline of Humira. And many Costco hourly workers, they're going to be getting a raise to more than $30 an hour. Comes as the company continues contract talks with unionized employees. Speaking of raises, Wells Fargo CEO got a boost in pay. Charles Scharf will receive $31.2 million for 2024. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. David and Paul.
All right, Lisa Mateo, thank you so much. We appreciate that. David Gura sitting in for Tom Keene here this morning. I'm Paul Sweeney. We're live from our Bloomberg Interactive Broker Studio in New York City. We're streaming live on YouTube, so head over to youtube.com, search Bloomberg Podcast Live. All right, I'm an equity guy. All I know about the fixed income markets is, interest rates go up, bond prices go down. But some people, they manage to build a career around that stuff. Robert Tipp is one of them, chief investment strategist for PGIM Fixed Income. Robert, I can sit in a 2-year treasury, the government, they're going to pay me back in 2 years. I can get 4.2%. Is that my fixed income strategy, or do I take credit risk? How else do you guys think about fixed income opportunities today?
Right, absolutely. I think that big picture, we've had a full Fed rate hiking cycle. It's taken rates up a ton.
Yep.
The Fed's a priori is that eventually rates are going to be lower. And so I think that's why investors are keen to lock in interest rates. And for most investors, 2 years is not going to be long enough to do it. And I think that's why we're seeing, for this point of the cycle, still a pretty flat yield curve. There's a lot of demand for long maturity fixed income. And I think it's because of that kind of thinking. This is an income level at which I could really get by. It's something investors haven't seen for, a decade plus.
When you listen to Fed Chair Jerome Powell, who I don't think is showing much celerity, he seems very content just to sit and wait for all of this to unfold such that it is. What is your sense now of timing? How are you thinking about the time frame now in light of, yes, this most recent meeting and the Fed Chair's comments, but more broadly the state of the economy today?
Right. Well, I think the economy is doing really well. And I think anxiety that they might have had about a hard landing or losing the soft landing is diminished. Now, there's a lot of policy risk out there, and so, they're definitely going to be on full alert. But all else equal, I think the downside risks have attenuated, and the consumer continues to do very well. All of the data has been very bouncy, but generally speaking, it's been enough jobs to stay at a pretty good level of employment. So I think in a way for them, time is standing still. The base case is, over the course of the year, we're going to get a couple rate cuts. But, that view has changed a lot. There have been times when the inflation numbers have been lower for a few months. You get a couple weak payroll prints. It looks like there could be a lot of cuts. But I think this notion of a pretty range-bound market, a couple cuts happening later in the year is a good base case.
For clipping coupons, how much risk do we want to take?
Yeah, I think that most investors, looking at the past 10 years, last 15, 20 years, every time risk premiums have gotten this low, every time corporate yields relative to treasury yields, those spreads have been this tight, investors are conditioned to expect something bad to happen. But I think that's a function of the last 15 years. I think the underpinnings right now, post Sarbanes-Oxley, post the strengthening of the financial system after the financial crisis, the European sovereign crisis, the systems are pretty good right now. Pandemic, another crash testing of the system. I think we could be in for a pretty protracted period of pretty narrow spreads, like you saw in the mid-90s. Spread levels in European credit, like in the 04 through 07 period. I think it could be, one of those kinds of periods. And so it may not be too late for credit. People should be at a medium or higher level of credit risk.
All right, you're going to stick around for a couple minutes, Robert. We're going to get this market open. Lisa Mateo, that is her job here today. We do have some green on the screen here indicating could it get some bump there. But we've had a big earnings week. We had some economic data come out today. The inflation data, the core PCE, kind of right in line with expectations. No kind of thing to worry about. But right now, let's get that market open with Lisa Mateo.
Yeah, it'll be interesting to see if the NASDAQ continues to lead the charge at the open, but we are off and running. So we'll start with the S&P 500 right now, up 0.4%, 27 points. We have the Dow up 0.3%, 150 points at 45,035. The NASDAQ, there you go, up 0.2%, 49 points, up 0.7%, 154 points at 19,837. So the NASDAQ still leading the charge this morning. The two-year yield, 4.21%. That's little change, and the yield on the 10-year, 4.52%. And that is little change. We'll take it to commodities. We have COMEX gold, $2,850 an ounce. Then we go to oil, Brent crude, $76 a barrel, WTI crude, $72 a barrel, and the Bloomberg Dollar Spot Index up about 0.3%. Tech earnings in the spotlight. So I want to point out Apple up about 3.5% and Intel up about 0.3%. That is your Bloomberg opening bell report. David and Paul.
Lisa, thanks very much. Here with Robert Tipp of PGIM in our studio here in New York. And I want to ask you just about the conversation that seems to be picking up steam about the fiscal situation in this country. I think it was largely absent from the campaign, but we're seeing it kind of in starker relief now that the president's getting some of his economic team in place. What is your sense of what, if anything, is likely to happen with Congress, with this White House, when it comes to debts and deficits, and how do you dovetail that with the work that you're doing looking at fixed income?
Sure, yeah. I think what we've seen over the years and what we're likely to see is that given the status of the U.S., the strength of the dollar, and there are a number of reasons supporting that dollar value, and the size and liquidity of our market and the structure of the issuance and so on, these things are all very protective of the trading market for treasuries and the value of treasuries. Having said that, that may prevent any kind of, cataclysmic risk like you might have seen in European developed sovereigns at times, but it does exact a price. And it used to be the case, kind of like it was, to a more extreme extent for German bonds, where the supply was low, the credit quality extremely high, the yields were lower than other competing instrument like interest rate swaps. The same was true of treasuries. But increasingly, and especially so over the last couple of years, treasury yields have risen relative to interest rate swaps, and in a way, they're pushing up relative to corporate yields. So I think, we are paying more. It could be 0.25% more as a result of the high budget deficits, and how this, plays out in terms of the budget deficit going forward. It is going to potentially cost more.
We've seen a lot of new issuance in the fixed income market. Investment bankers have been talking about it on their quarterly conference calls. At PGIM, do you guys pick up the phone when the syndicate desks call you guys? Hey, we got a new deal. Do you guys look at new issues, and how do you look at new issues?
Right. I mean, we have a huge credit staff. We have huge, trading desks, and new issuance is an opportunity, and issue selection is an opportunity. So absolutely, that's a big focus. It is high, but, it's worth keeping in mind that a lot of these markets are really recycling paper, and they're shrinking. So the investment-grade corporate market is not really so much so levering up by large corporations, but they're taking advantage from a strategic point of view, the opportunity with narrow spreads to issue a lot of paper, push out the maturity of their debt profiles, and that market is growing along with the economy. Some other markets, though, like the public high yield market, the quality of that market has gone up, and the size of the market is actually shrinking.
Right.
So, now there are other places where that issuance is going, but that's a positive technical backdrop, and there are parts of the emerging markets as well where that issuance, it can be large, but it's not necessarily a growing market.
Interesting. When I was on the sell side, big client.
Oh, very
big
good.
client.
All right.
I'll go across to New York any day of the week to talk to those guys on the Jersey side. Robert Tipp, thanks so much for joining us. Robert Tipp is the Chief Investment Strategist at PGIM Fixed Income. Again, looking at the bond market here, pretty much quiescent, as Tom Keene would say. How about that one?
Yes, the Tom Keene
pretty much
lexicon.
flat. 10-year Treasury, 4.51%. The 2-year Treasury is 4.2%. That means we have a positively sloped yield curve. Lisa Abramowitz tells me that's important. Cam Harvey from Duke University, whose course, let's just say I passed.
Okay, good.
That's all you have to do. 20 P's equals 60 G's back in 1991. We'll have more coming up. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
In the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Well, we've got stocks ending a pretty volatile week. On a positive note, this is after solid forecasts from tech heavyweights. For example, Apple shares right now up more than 2.5%. Also, word, NVIDIA CEO Jensen Huang going to meet with President Donald Trump today. So we'll start with the NASDAQ up 0.8%, 162 points. We have the S&P 500 up 0.4%, 26 points. The Dow up 0.2%, 111 points. We go to the two-year yield at 4.19%. That's down 1 basis point. And the yield on the 10-year, 4.51%. That is little change. With the Bloomberg Dollar Spot Index up about 0.3%. And a few stocks on the move this morning. Well, with shares of Walgreens, they're lower, down 14%. It said it would suspend its quarterly dividend, saying that it really needs the cash to deal with litigation, also turnaround efforts. And then finally, footwear and apparel company Deckers Outdoor, they're down 13%. Fiscal year revenue forecast, well, it fell short of expectations. That is your Bloomberg Business Flash. David and Paul.
All right, Lisa Mateo, thank you so much. We appreciate that. David Gura sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. So head over to youtube.com, search Bloomberg Podcast Live. Red headline coming across the screen, not too major, but anytime an investment bank is mentioned, I'm going to mention it. JP Morgan trading co-head Sipple, he's going to exit. Mr. Thacker is named sole lead head of trading there, so we'll have more reporting on that for the folks.
I think most fascinating about this is they were named co-heads just about a year ago.
Yeah.
So it was not a long tenure in that role for
No,
Jason
and this is the time of year where you see during bonus season people get paid. That's when you see movement of people. That's when you see companies, if they're going to cut headcount, that's typically when they do it. So that's the time of year. All right, a busy time down in Washington, D.C. for the Trump administration as the transition continues. Want to get the latest on that. Jen Flitton joins us, head of U.S. Government Affairs for Invesco. Jen, let's talk about, it's been a busy week for some of President Trump's nominees sitting in front of various Senate committees trying to get approved here. What have been the highlights this week for you? It looks like we actually carried some of the RFK Jr. Hearing as well as that for Tulsi Gabbard. What are you making so far?
Yeah, that's right. So RFKJ, Robert F. Kennedy Jr., is now having accomplished both the Senate Health Committee and the Finance Committee. It's going to take a committee vote next week, most likely to advance him to the Senate floor. Kash Patel as well for the FBI director. And then, of course, Tulsi Gabbard for the head of D&I. These hearings were the most controversial hearings that we saw. And I think there's a question right now, especially with Tulsi Gabbard's nomination, whether she can get out of committee. And we still don't know, because this is the Intelligence Committee, whether this will be a public vote or whether this will be a private behind-the-scenes vote of the committee.
While all of this is unfolding, I imagine there is work underway on what I think the president and many of his economic advisors have said will be kind of the primary focus for them in the year ahead, and that is on getting this Trump-era tax cut bill extended. Where are we in that process, and when do we begin to get some indication of sort of what will be in that, what won't? I know there was that meeting in South Florida where a lot of members of Congress whose districts are affected by that cap on state and local tax deduction, for instance, went down and tried to lobby the president. Where are we in that process? When do we get clarity on where it's headed?
Yeah, that's right. So the House Republican Conference met in Doral, Florida, and President Trump did talk to the group and sort of outline all of the big things that he wants to do. What they haven't yet decided on is how to go forward on the reconciliation instructions. And that's a really key, I know it's a process issue, but it's a really key part of this process. They have to pass a budget resolution with reconciliation instructions, a joint resolution out of both the House and the Senate. And right now, the House and the Senate are divided on the actual package, how big it should be, whether there should be one or two, because it's possible under the rules to do two reconciliation packages this year. And just to sort of step back, reconciliation means that a simple majority in the Senate can pass a major bill out of of the Senate, which is a big deal when typically bills take 60 votes to get out of the Senate. And there are rules around what can be included in reconciliation, and it really has to do with having some sort of revenue impact or debt impact. But they can do big things, and as we saw in the past, that's how TCJA passed out of the first Trump administration. And so they really expect to move forward on tax reform before the end of the year. The question is, do they do one or two? And that really has to be decided first, I think, in the House. And we'll see that movement next week in the Budget Committee.
Jen, how do they plan on paying for whatever package they do agree upon, or does it even matter that they tell us how they're going to pay for it?
Well, they have to decide on, and that is going to be sort of up to Senate Finance and Ways and Means, what the baseline is. And if the baseline is current policy, then technically, for the context of scoring this bill, then they don't have to necessarily pay for the extension of the current provisions of the 2017 tax bill, the TCJA, right? But there are other things that Trump wants to do that President Trump really detailed during the campaign and reiterated this week in Florida, with extending some sort of no tax on tips and no tax on Social Security benefits and no tax on overtime income, right? And so there's a real expansion here that they're going to have to deal with. It's going to cost money.
Yep. All right, Jen, thank you so much for joining us. Jen Flitton, head of U.S. Government Affairs for Invesco. Busy times down in Washington, D.C. for the Trump administration. We will have a continued reporting of that with our news in New York City. Here's Michael Barr.
All right, the AP now reports that 40 bodies have been pulled from the icy waters of the Potomac as investigators are beginning to piece together what happened in Wednesday's mid-air collision between an American Airlines flight and an Army Black Hawk helicopter in Washington. All 67 on both aircraft were killed. The airplane's flight data recorder and cockpit voice recorder, they have been recovered. The National Transportation Safety Board member Todd Inman says they're starting the process of opening up those recorders.
The voice recorders actually have to be what's called auditioned among a number of people so that there's complete agreement of how the transcript will come out. And we also look for ancillary noises, maybe a boom or a thud or a crack or something in the cockpit.
Inman says in the cases of these major investigations, it could take a year, if not more, for them to come to a final probable cause. President Trump says he doesn't know exactly what caused the crash, but he says hiring practices within the federal government could have played a role. At a White House press conference, reported pressed the president why he's singling out diversity, equity, and inclusion.
I'm trying to figure out how you can come to the conclusion right now that diversity had something to do with this crash.
Because I have common sense.
Trump also said there may have been a pilot problem with the helicopter. He conceded he didn't know if it was the controller's fault. The president later signed an executive order for the FAA and Transportation Department to review hiring and safety changes that took place under the Biden administration. And President Trump poised to unleash his first wave of tariffs Saturday, sending foreign governments and businesses rushing to skirt potential duties and prepare for retaliation. The targets, unlikely ones, Canada and Mexico, the two biggest buyers of U.S. goods. The president has pledged 25% tariffs on about $900 billion in goods from both nations, whose trade surpluses with the U.S. have long chafed the president. Trump vowed to follow through by his self-imposed February 1st deadline. Marianne Faithfull, the British pop star who inspired and helped write some of the Rolling Stones' greatest songs and endured as a torch singer later in life, has died. She was 78. One of the first songs written by Jagger and Keith Richards, the Melancholy As Tears Go By, was her breakthrough hit when released in 1964 and the start of her close and tormented relationship with the Rolling Stones. I mentioned Marianne Faithfull in the newsroom this morning. You could hear crickets.
Oh, really?
Well,
One Lisa Mateo was like, who?
I'm on the Who list, too. I did not know.
Oh,
I did
my
not
gosh.
know.
Wow.
Ruby Tuesday was written for her.
I didn't know that.
The Hollies, Carrie Ann, that song
Really?
actually was based on Marianne Faithfull.
I mean, the pictures are just stunning. I could see why people were writing
Appreciate
songs.
you taking us down Memory lane.
Well, Tom Keene would know. Tom Keene would have the background.
He might call in. Maybe
Yes,
Tom
he may
will call in
call
just to give you that shoulder to cry on.
I give up. I give up on all of you. Global news 24 hours a day and whenever you want it. Music news, too. I'm John Tucker.
Exactly, John Tucker.
Back
Thank
to you,
so-
neophytes.
Exactly. I mean, I saw the tweet from Mick Jagger over the news.
I noted it.
Okay.
Let's say. It was nice to hear her.
Yeah.
Thank you,
Okay, very
John
good.
Tucker.
Yeah, and again, if Tom Keene were here, there would be some extraordinarily deep background story.
Where
that
he
would
met
have.
her
Ye-
and
yes.
He played guitar
Club
with her.
Passim or something.
Up
Yeah.
at Woodstock in
Right.
73 or something like that coming up. S&P up 25 points. This is Bloomberg. Good morning.
You're listening to Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
All right, we got David Gura sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube. So head over to youtube.com, search Bloomberg Podcast Live. Brian Egger joins us, Bloomberg Intelligence. He follows all the casino, hotels, the theme, the cruise ships, all the fun stuff out there. But he's really been one of the top casino analysts on Wall Street for 30 plus years, all over the bulge bracket firms. He's now with Bloomberg Intelligence. Hey, Brian, talk to us about, I'm not really into the betting thing. Other than when I go to Vegas, I go to Bellagio, I go to my craps table, I play the 6 and the 8 and the point full odds. That's my game.
When in Rome.
Yeah, and then I got the Sweeney Suite at the Bellagio, the high roller suite. But this whole FanDuel DraftKings thing's exploding. Talk to us about those businesses and what an event like the Super Bowl means to those businesses.
Yeah, so we have 32 states with mobile betting now. Not as much growth in the last years and previous years, but still a lot of mobile betting. And the vast majority of wagering will take place not only in those books, but others mobily as opposed to in brick and mortar sports books.
Paul and I were talking earlier in the show just about where this game is taking place, where it took place last year. These are both cities, New Orleans and Las Vegas, where there is a lot of casino gambling. How does that color or affect the way that people bet on these games?
So on the one hand, you have a tightly contested game, as Paul mentioned, 1.5 spread favoring the Chiefs.
Wow.
On the other hand, it is kind of a tough comparison. I'll play a little bit devil's advocate here because you only have 2 betting states in the last year. You do have New Orleans, but of course we have those worrisome security threats after the terrorist attack on New Year's Eve. And remember, last year's game was in Nevada. We all remember that well. So for Nevada books, you had a lot of traffic in town. This year, New Orleans, perhaps not quite the same thing. A lot of growth last year, so certainly it's going to be a tightly contested game, a lot of excitement. The point spread shows that, but not the easiest comparison versus last year.
I'm just looking at the FA function for DraftKings. Their revenue in 2020 was $600 million. Forecasted for 2024, almost $5 billion. Wow. $6.4 billion next year. This mobile betting thing, it's a thing, isn't it?
Oh, yeah.
It's unbelievable.
They've got more than 40 states with sports betting, but 32 with mobile sports betting. So think about where we were in going back to 2018 when the Supreme Court allowed unrestricted sports betting outside Nevada. So we've come a long way in those 6 years.
Okay, here's something just...
No, of course.
In my local luncheonette last Saturday, the local high school basketball team, there's probably 10 kids around the table all eating their huge breakfasts. What were they talking about? Betting.
Were they?
Point spreads.
Yep.
And they're putting... on football, that really concerned me.
Well, it gets to the question I was going to ask you, which is you see this kind of transformation of the way that we watch and participate in spectating sports. And, you watch a game, tons of ads for DraftKings and other sites, and your kids pick up on it in that way. But talk a bit about that, just the way that it's kind of changed sports generally, having the availability of gambling in this way.
It really has. On the one hand, if you have money on a game, a little money, it adds to the excitement. But I echo your concerns about the fact that you have advertising potentially targeting college-age students or younger people. There is much talk in the industry about the need for those safeguards.
Just broadly, real quickly, 30,000 foot. How are my good friends on the Strip in Vegas doing? One of my happy places in the world. How's Vegas doing?
Vegas is doing well. The fourth quarter, for a couple of reasons, was down a little bit from last year, but I think that's largely because a less favorable timing of Christmas and New Year's, that timing in the middle of the week. And some unlucky play at the baccarat table. Probably because
there you go. That's what you
maybe because you were there or you weren't there. Yes. I don't know if it had the Paul Sweeney factor, but those are definitely factors. But that being said, you go back pre-pandemic, we're well above that benchmark.
I love when I first started investing in. It was one of the sectors that I was assigned was the gaming. You could put in your 10Q. We missed the quarter because of bad luck.
Is that right?
Yeah, I'm like, what? But that's certainly...
If your business is slot machines, it's probably not valid. But if your business is high-end baccarat, it could be a factor. So.
Right. See, a big whale. It was back in the day when these companies were smaller, and if a big whale came in the last weekend of the quarter and took you out, you missed your numbers, and you could say, hey, this big Japanese tycoon came in. Brian Egger, that's his business. Senior analyst, gaming and lodging. Somehow he's made a career out of that, being one of the best analysts on the street covering that space. David, thanks for
happy to be here. Have a great weekend. We'll see how this game goes tomorrow. Duke UNC 6:30.
6:30, yeah.
We'll be texting.
Yeah, it could be interesting. So again, the game, Duke, North Carolina, Cameron Indoor Stadium, 6:30. This is Bloomberg. Good morning.